Yes, legends, how's everybody doing? Hope you're doing fantastic today. Let's analyze the situation aquí todos juntos for the price of Bitcoin. Hope you are doing absolutely great, guys. Let's discuss a few scenarios here. For the price of Bitcoin, of course, we are seeing some pumpy action, some pumpy momentum. Are we going to get follow through to the upside? It is just pumping and pumping. A bit of volatility here with CPI that came out as expected. No major big changes. Okay. Inflation. It's weird because some websites do say it did forecast 2.7. Some say 2.6. So here on Trading Economics, it was 2.7 on inflation rate. But yeah, kind of as expected. Got a bit of volatility. Stock market pumping, then a dump, then pump. So a little bit of local volatility. Then New York Open. I had to do some things today, guys. This is why I didn't go live sooner. But we're going to do a long live stream today anyway, regardless. It's looking interesting here where we at. I have to say, get those votes in on your poll because it's interesting where we are at the moment, because I want the price to reject, if I'm honest. Okay? I want the price to reject from this zone. I'm going to go through some great education, guys. I got a few things based on the momentum that we had here. Great education. Great to look for these kind of setups if you're into scalping. I've just been going through the moves here and just some knowledge, guys. You know what? This is what it's important right now. Am I favoring still $89,000? I have to say, you know, there's still a good chance. This is very, very noisy, I have to say. It's becoming very, very noisy. But if it is going to reject, it should really reject successfully from this zone. That's where I'm going to leave it. It should reject successfully from this zone. We literally got to the golden pocket. Golden pocket, perfect rejection. It's a zone of interest, always the golden pocket, regardless the waves in RSI and divergences and bullish and bearish and moving averages, right? The golden pocket is very well respected, regardless if it is going to be the lower high or if it's just going to get a little reaction and then it's going to move back up it, right? So overall golden pocket, right, from the movement down of last week, right, just to keep things relatively simple. We're at the golden pocket, got a little reaction of $500-600. You know, it would be nice. You know, I would prefer that, you know, if we are going to roll back down to test $89,000, you know, maybe slightly lower, this would be my preferred zone at this moment with the information that we have on the chart here from the last few days, that, you know, this is actually the high. I would prefer that. There is a bullish scenario which I would expect a correction first of all, but it's all about maintaining a higher low above $90,800. So it's going to be interesting because you know, we're at that point here where, okay, golden pocket, you know, it needs to reject somewhere in this area, preferably you don't move up to the, you know, 8.88 Fibonacci from the move from the high to the low, right? Especially with the structure that we have here, which we will go through, guys. It's pretty interesting where we have you know, the levels have been rejected and bounced from. Okay, for any of those interested in scalping, right? I've got, you know, some great education today for all of those people that are interested in these little movements of $500 to $1,000, right? Which is, we're going to go through that, of course, for anybody that, you know, has many hours that in front of the computer and the charts. And you know, there's just very, very interesting, you know, nice little scalperados situations here in this momentum to the upside. Anyway, let's go through the comment section. First of all, I have to say that this content is not financial advice, okay? It's for educational purposes only. The information provided is not guaranteed to be accurate or complete. Always conduct your own research before making any financial decision, legends. Said that, let's go through the comment section. Say hello to the beautiful community. I want to get these votes in, guys. Get these votes in. I'm actually surprised with the poll here. We've been talking about this for over a week right now. What comes first for Bitcoin? Because we haven't hit 95k plus, and we haven't got below 87k, right? Whereas that we have that distracting liquidity below 87k, right? We've been eyeing this now for the last few days. So we this is the problem, right? We might get blinded by the liquidity to the upside. It doesn't mean that we cannot go to 95k, right? Overall, with the information that we had yesterday, it looked better to take out $89,000. It still looks okay for that. It still looks good. However, we did get a significant bounce from this zone. Whoever longed from here, guys, absolutely wonderful. We were talking about that 5-wave move to the downside, the 5th wave, not getting a successful move to the upside and just looking for a little bounce. Just looking for a little bounce, not this. But anyway, anybody that is long from lower eventually is, very, very happy. And now it's do we short? Well, we have a problem here. I'm already considering a swing short, okay? I'm like, stop loss is far away, but I'm not liking the rejections. The rejections look like crap, and preferably the rejection that we got from here would have been a little bit more steep, right? However, all of the rejections are looking very, very corrective that we've had throughout the last few days, and that is not bueno. It's not good. Okay, so we got the movement down here from yesterday, bang, 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 right? The 3rd wave, you won't follow through preferably. You won't follow through on the 3rd wave. We did not get follow through. So that obviously there's the 1-1-2 scenario. But you always start thinking of the 3rd wave. It needs follow through, right? You want the 3rd wave to break down. You want move down, bounce, 3rd wave, you want it to go. Right, you want this wave to go, and this is literally what we're having right now in these movements to the downside that are looking well. This running flat or WXY, it doesn't really matter here, but sideways momentum. Eventually, you didn't get the 3rd wave even testing the lows here. Well, this was a double top. My bad. This actually took out the highs, and then you got this movement down sideways, another move to the downside. This looks very corrective. Push down, bounce, test the lows. You test the lows and you get this bounce, especially with this movement. It's not looking great. And now with this rejection, I would say it's still quite soon. But it's not looking too great on the lower time frames, on the 1 minute, right? You want the move down, the bounce. You want a bit of power here to the downside, right? Where are the bears, right? Why are they not pushing down to give you that sign of weakness? So we're having a lot of the problems here, right? 3-wave down, move up, you're already taking the lower high. That's already bullish to take out the highs. Same here, 3-wave down, right? You want this to follow through. The moment you start bouncing and dancing around, then you're probably going to take out the highs. Same scenario throughout the last couple of days here. And this rejection that we got from the highs is just not looking pretty for the bears. You got the rejection move down, a little bit of a consolidation, and then this push. You want this push to move. You want it to go. Go, go, go. Right? You got an epic bounce taking out the lower highs. Taking out these lower highs then eventually makes this very, very likely corrective on the 1 minute time frame, which is looking to take out the highs again. So, and then if we take out the highs, do we reject again in this kind of price action? And if so, then we just take out the highs again, right? So it's the movements down are not looking promising, unfortunately, for the bears, and it's just wanting to push up and push up and push up, right? So it's interesting to see the votes today, because I've been making these polls for over a week right now in this area, right? And it's pretty interesting when the price is moving down, you get a little bit more votes on the bearish side, and when the price is pumping, you get a little bit more votes on the bullish side. But today, I'm surprised to see a little bit of a 50-50. Now, as the price is pumping, we're getting a few percentage more on 95k. people are feeling a little bit bullish, but I'm surprised it was a 50-50 here just a few minutes ago. So it's still very much possible, but the bulls want to push. The bears are not having very successful power to the downside on these movements to the downside that we are getting here throughout the rejections of the last couple of days. So anyway, we're going to dive in through the analysis. I have to say, with this noise that we have from the last 24 hours, you know, it just looks like it wants to push. I have to say, it wants to push. I'm hoping for this rejection. We're hitting the golden pocket. Now we're back above the golden pocket. So it's about, you know, do we take the highs and reject properly right now? Or do we end up blasting off? It's one of those areas that, without a doubt, we could have a wave 3 getting developed, and this is why this information that we do get now in the next, you know, 10 to 20 minutes potentially, I need to see another big rejection. I need to see the rejections having a little bit of power here, because if not, it just looks like it wants to pop out, and that's what I do not want to see eventually, right? For the ones that are attempting a short in this zone. So golden pocket got a quick rejection. We are back at the golden pocket because the 3-wave move to the downside didn't have any power. So as that did not have any power to the downside, when we do take a look at the 1 minute, we're back here to the highs, right? This movement looks extremely corrective. You've got a movement down, consolidation, movement down. You take out the lower highs here. I mean, that's it. You know, this is very, very corrective with this bounce confirmation. So now it's trying to squeeze out again, right? See if it does slow down in this region and gets the rejection. It's all about the rejection. Does it manage to have some significant power to the downside? But yeah, are there any risks here of breaking through with a huge amount of volume? You know, we are at one of those sweet spots at the moment. We've been saying for the last few weeks that we're going to see a pop, okay, happen very, very soon in the next coming weeks. And, you know, I'm a little bit concerned right now with the information, given that you could pop out in a third wave from here. You know, the multiple 1-2s in this case does not look great unless you form a sideways correction here. Little bit concerned here that the price might pop out. So it is, the bears really want to show themselves. I'll tell you what, if the bulls, you know, manage to take out 94.8k, I can tell you that I am incredibly interested in looking for short positions here as swing shorts, because you know, we ain't gonna go too far away with all of that liquidity that we have piled up down here. I can tell you that. And the movement to the upside has higher probability to be a corrective move to the upside since 80,000. Okay, so if it were to manage to push through here, right, you might form another 1-2, right? You might correct here and then follow through here to the upside, or you might reject. I'm still not I'm still ruling the possibility of forming a lower high here eventually, and come back down to $89,000. Still very much on the cards. This still, okay, even though we're pumping, right? We're pumping, and it does look like, oh yeah, no, we're going to take out the highs of 95k. Gonna give it a little bit of a breather here to see what it does in the next you know, couple of hours. I'm actually going to be on the stream here. I want to go through the lower time frame, and we are going to discuss a little bit of this local price action, because you can, you know, it doesn't look pretty. It does not look pretty. The only thing here as well is that what is not in the advantage of the bears at the moment, with just the recent information that we're getting here, is that we are moving up with increasing volume, and that is kind of, you know, a little bit concerning. Eventually, price is moving up with increasing volume. And that's something that you know, just take into consideration, because you might be, you know, attempting to develop a third wave here to the upside. So yeah, let's go through. I don't know where to start, guys. 4 hourly, 1 hourly, 15-minute time frame. I think what is most important is this range. Even though, yeah, this range and then the lower time frames, the momentum that we have been getting here throughout the last couple of days, it is muy importante. But yeah, this is without a doubt the zone where the bears want to step in. They really want to step in here and not give a little bit of priority here for the bulls. Literally attempting to break up the valley area high, as we can see. So it is really a little bit of a crucial area where the volume could really kick in. So yeah, I'm not happy with the rejections that we are getting here. Not extremely happy with the rejections that we are getting here for the price of Bitcoin, unfortunately. And the momentum to the upside is having increased volume, which is not the greatest, of course, if you're looking for a reversal, just taking into consideration that, you know, you might get that wave 3 here to come all the way up to 94.9k plus, right, which 95k basically, right, which is the highs of the range. So we need the bears stepping in very soon if we want to maintain a lower high, right? We are getting above the level of resistance, which is the valley area high of this entire zone, right, since November. And we are literally just getting at the top of the golden pocket, basically, from the movement down. That's not nice. This gives a little bit of a breather here for the bulls to actually get to the next level of resistance, which is coming all the way up to the yearly level. The point of control that we do have up there as well, and a daily. There is it's still quite a significant cluster here above 93k. There is the yearly level, we got naked point of control, we got daily, but this is one of those areas that if this ends up being more bullish than we thought, obviously you could be developing a third wave here, right? Which is something that, you know, with the current price action, I am not liking it too much. With that increasing volume, we need to see some kind of a solid rejection very soon, because if not, it's going to be looking promising for the bulls. So we're going to discuss a little bit of this momentum. You know, I have very much an issue with this kind of price action that we have formed since last Monday, right? This movement to the downside as an individual wave, regardless if it's a contracting diagonal or if it's a corrective structure in a WXY or an ABC. Now, you know, ABC to fit in here, the problem is this movement to the downside that we had that looks very three wavy, okay, that we were discussing throughout last week. It just looks very three wavy. So there is a big issue here to try and look for a zigzag in an ABC, because an A wave needs to have 5 waves down in a zigzag, 3 waves up or whatever correction in a B wave, and then another 5 wave down. It's not clear in this movement down. So the thing is that if we did have a solid 3-wave structure here to the downside, we could have combined, you know, 3-wave in a wave W, 3-wave up in a wave X, and then a flat here in your wave Y. So that could have been okay if we could have found a 3-wave ABC zigzag. However, you don't, you know, this movement down it just looks very 3-wavy. Of course, if price were to moonshot from this zone or get a correction and then moonshot later on in a wave 3, you would just have to, I would have to consider that this was probably the W, X, and Y in a flat here, which doesn't look, you know, doesn't look extremely great. This is the movement that got me a little bit disturbing, of course, and obviously does affect the probability side of things, to look for a 3-wave down. Okay, so it can be a 3-waver, but in a WXY, where you have a 3-wave here in a zigzag, okay, from this high, zigzag down, and then you have your triangle here in your wave X, and then you have another 3-wave here to the downside that can be counted. So you've got W, X, and Y here. The main issue from here is this bullish structure? Can you count a motive wave in this momentum to the upside? Is there anything impulsive from the lows here? And I have to say, based on the structure and the timing, it just doesn't look pretty, right? It doesn't look extremely pretty, because not from this pivot high or from this pivot high you can find a solid 5-wave move to the upside to count this as a wave 1. So you have a 3-wave up here. You can't form that wave 1 in an impulse in a 3-waver. You need 5 waves. You don't have here a solid 5-wave move up to this pivot. It would have to be some kind of a diagonal, but a diagonal doesn't fit here nicely. It would just be looking very, 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 very awkward in a kind of an expanding one, and that is never preferred. So then we come up with the idea that this is the wave 1 right over here, and then here you have a flat, and then your wave X. And literally you have a WXY here, very, very confusing WXY. This would have to be your X wave in a 3-wave structure, and then the movement down. It just doesn't look pretty, but this would have to be the low of your wave 2, because you can't count this high as a wave 1, and you can't count this high as a wave 1. So all of this would have to be your sideways complex WXY correction. Now, the thing is from this low over here, yes, you have impulse correction, and this is where the main issue comes, regardless the bullish case scenario. Even if this is your wave 2, or if this is your WXY, which would be looking like this, okay, because this would be the 3-wave down, the zigzag up, and the flat here. Very complex, very choppy, very noisy. But regardless if this is your wave 2 or your wave Y, this is the most important leg to the upside. Now, this is where the fresh information starts, from this low, because there's no doubt for me that the movement down here was an impulse. So you need to find some kind of a flat here, preferably in this movement to the downside, and this is where the information is looking very, very interesting, and that's where we're going to go in through the lower time frames, of course, in this momentum, which is just it looks very, very interesting how the price is moving up, and the possibilities that there is still for the bearish case, which from this low, you could be forming 1, 2, 1, 2, and this is your 3rd wave getting developed, and it's going to push really, really hard throughout the next coming hours. I have to say that there's no invalidation for the moment. It looks okay for that to happen, but there is the bearish case as well, which from this low, it's a zigzag, right? This ends up being a 3-wave structure that is probably going to fail, right? This is the bearish scenario here. 3-wave up, and as we do have a 3-wave move to the upside here, we would label all of this as a flat. For me, this looks prettier, okay? It looks better for the for the bears, if you ask me. If you ask me what would be your favorite scenario here, this would be my favorite scenario. WXY, okay, double zigzag, your wave X is a flat. So, I mean, yeah, I have to say it's you know, this is why the price really needs to kind of reject in this area, because when you get the Fibonacci extension as well, we've got a 3-wave up, a clear flat structure. It's kind of very, very clear that it is a flat movement here, and then this zigzag move to the upside, right? There's just no other way to count this in a better way as a corrective move at this moment, right? So you got the 3-wave move up in the wave W, and then you have the wave X here, which is a flat. And then, you know, when you get the extension, Fibonacci extension, your common target zone, which is why I believe that we could get a rejection from this area. However, it's all about how are we going to reject down in the next coming days, right? Will it be another 3-wave corrective structure? If so, you know, I kind of would be expecting that, okay guys, this is looking bullish. I would give it a little bit of time eventually, because this is the 15-minute, but still some time for this to develop. But if the next move down kind of is going to fail to like really nuke, because that's what you want to see, right? For the bears, right? You want to see a strong move down in an impulse, all right, in a 5-wave structure throughout the next coming days. But we're not seeing that happening yet, right? Or obviously today either, right? We're just taking out the local highs. So still very much the possibility of rejecting. The 1-to-1 to the 1-2-3-6 is a common target area for a WXY double zigzag, and this is what would fit better for the bearish case to form a lower high eventually in between the golden pocket and the 7/8 Fibonacci, right, which is literally in this Fibonacci target zone when we consider this complex possible correction, right? And you know, this is something that could happen, right? Obviously you want to see that big rejection in this zone, which is not happening, right? The price is pushing, and this is why, you know, possibly if the bears don't step in here very, very soon in the next coming hours, bulls might just manage to squeeze through, right, to get above 95k basically. So when we do take a look at the bullish case, what is disturbing is the increasing volume here, even though increasing volume is okay for the end of a correction as well. So this is what it makes it. This is like the zone where bears need to step in, because this is the typical thing of, oh, you got volume increasing, so it means that you can possibly follow through here. However, moves to the upside do finish with high volume, I have to say, right? You do get finished moves with high volume, right? You do get movements, spikes to the upside with high volume that finish, right? At least in the short term, right? That ends up getting a rejection, regardless if you get follow through later on or not. So, but it's you know, this is why for the bears, this is literally the zone that needs to slow down and get a strong sell-off, right? Get a strong sell-off, something that looks like a correction but ends up in a 1-1-2 and then bang, right? However, we're not getting any of those, you know, nice movements to the downside here throughout the last, you know, 1 to 2 days as we are hitting the highs. So movements down are looking very, very corrective. We did bounce yesterday at the literally point of control of this range of the last week. Okay, we kind of, it looked like you were going to cross it, but you did not. Held nicely as support, the point of control, and with that volatility, and now we're getting this push to the upside. So bullish case scenario, regardless if this is a wave 1 and this is a wave 2 and this is another wave 1 and wave 2, you know, or this is a WXY where you would have to fit some kind of an ABC movement here, 3-wave up and then a flat in your wave Y, WXY right there, sideways correction. this is the most important movement from this low. The movement to the upside is from this low that it is very, very important, and that's where you get the first push and the first corrective structure from yesterday, right? First push up, correction. This could be a wave 1, this could be a wave 2, this could be a wave A, this could be a wave B. If this is a wave B, you want this to be a wave C, literally. And this is why you do not want to see the price succeed much, much higher from where it's currently at. Yeah, you can bounce, you can move up another $500. That's all good. That's okay. Currently hitting the 1-to-1 extension at this moment, as you can see, which it got a little reaction, but we just back above the highs. So volume is kicking in. The risk of having a wave 3 getting developed, you need to understand that it is there. But this is when you are trying to catch the Pico top, right, of the possible movement, but then the price literally spikes up and ends up breaking up in a wave 3, right, which is probably the scenario that we do have at this moment. Yeah, price is just pushing through, just pushing through here, and that is the risk that there is, obviously, with increasing volume, that you possibly have a wave 1, a wave 2, another wave 1 and a wave 2, and then you just really, volume starts increasing and we get the surprise breakout to the upside in a wave 3. And, you know, that's the moment that we get above $95,000, and then we just need to watch for the exhaustion to happen at above $95,000, right? Because I would still be very, very interested in looking for shorts here. However, this needs to slow down eventually, right? You would have to see the exhaustion after the wave 3 to the upside. So yeah, let's go right away through the comment section, see what the legends are saying. Best level to short around 98 to 100k. Thanks. RVM3, much love. New cooked the chart. Short at the next all-time high, says Eduam. Andy, my man, bears still hibernating. It's winter where I'm at. Very true, very true. Best zone to short would be, I mean, this would be a swing short trade, and like a proper swing short trade setup at $100,000. 100 to 102k would be the level of interest where I would be, but it's going to take a bit of time. You know, this is looking at the 4-hourly time frame. If the price were to succeed here to the upside and take out the highs here at 94.8k, then it's going to take a little bit of time, of course, to look for that exhaustion heading up either 96, 99 or 100k levels. You know, it could really pop out here, squeeze out very aggressively, and you know, we'll have to go from there eventually. But yeah, for the bullish case, regardless of for the bullish or the bearish, right? If we were to be developing multiple 1-2s in this area, and this is just cooking for a wave 3, you know, at this stage with the price action, it is a zone to, you know, manage risk. If you're looking for shorts, such as myself, you know, I'm happy risking 1% here. And depending on how the price develops, you know, either cut the loss at 0.5 or just take the 1% loss eventually. But and if we, you know, the good thing about this is if we were to get a sign of weakness, because I would really want to make this trade a 2%, even a 3% short. However, I can't short or add to the short position when the price is going against, right? We would have to see a pretty solid rejection and then the bounce here to then look for that rollover to take out 89 and maybe, you know, maybe take out 87k. But as the price is bullish for for the moment, right, in the last couple of days here with this rally. And it has the potential eventually of taking out this high at this moment. I have to say it does have the potential, unless bears, they need to kick in right now. If not, this will very much, we're not too far away of taking out those highs. $1,500, which is nothing for Bitcoin, of course. But yeah, overall, what we do see here, in the most bullish case scenario, you do have a contracting diagonal to the upside. Here, that could be either a wave 1 or a wave A. You have your corrective move, and either this correction finishing here, which is preferred also in a WX and a wave Y in a triangle. Preferably your first wave 1 starts from this zone. This would be that, you know, this is the kind of area where it has the possibility of really smacking out here very, very aggressively. It does have the possibility of smacking out, of course, very, very hard to the upside. So yeah, it is pushing pretty hard here. And increasing volume, so it does want to pop out. Yeah, it does look like it wants to snap out here in that wave 3. Need to let the people know in the community about de-risking here on the position, because it is squeezing out with some increasing volume. It is moving up here with increasing volume. That you don't want to see that. We're currently coming, there are some levels, interesting levels of resistance all the way up here. We're currently hitting the 7/8 Fibonacci. 7/8 Fibonacci with the point of control, which is just a few dollars away. We got a point of control from this zone. We do have also a daily level, which is slightly more to the upside. I mean, it could be cheeky that it just gets rejected from this zone without taking out the highs. But yeah, there's a bit of an intimidating movement to the upside eventually. If you do get across the golden pocket and you cross, you know, these levels, I wanted to see a solid rejection, which did not happen. And the bullish momentum here is looking pretty strong. So it is a moment of, it is hard to obviously look for a short position at this moment where the price is, like for a new, like a fresh short, and be confident that it is going to reject and form a lower high. You know, it is challenging. Of course, you can manage risk accordingly. You know, take into consideration that, you know, the bulls, the bears don't want this high to be taken locally, and preferably the idea of the bears was forming a lower high here in this zone and take out the lows at 89k, with potentially even going to slightly lower levels. But price is squeezing up. It has some pretty interesting volume to the upside, and this is the danger, of course, when you do get these corrective moves to the downside. These rejections, a rejection needs to be pretty damn solid, right? It needs to go to the downside if you're getting into an SFP or the highs here. If you form these corrections and, you know, you get the highs taken with increasing volume, it's one of those moments that you can get that possibility of a wave 3 getting developed here and popping out, which is the case. It is moving up. Bears are not stepping in. It's giving the probabilities, of course, right now for the bulls to develop a wave 3. And the problem is with this wave 3 at the moment, with increasing volume, you know, anybody that wants to take any shorts in this area as the price is moving up, right, without managing risk, of course, you know, need to be very, very much aware that you could be popping out in a wave 3. Okay, could be very much popping out in a wave 3 here, and price really just continues the momentum, right? It just continues the momentum in a double 1-2 here, and then the third wave is kicking in, and the third wave can, you know, really stretch its legs. This is the thing about a wave 3, that you can project it hitting the 1.618 extension, but it can go well beyond the 1.618 extension. You know, it can go all the way up to, you know, the 2.618 extension and even higher levels. So the third wave is eventually very intimidating, because it could really go to much higher levels. So if the, you know, regardless if this is the end of the correction right there in a WXY, yeah, the situation here with increasing volume from this leg up that we had yesterday, you know, you're literally having increasing volume and the possibility of a double 1-2 at the moment. And, you know, obviously after a double 1-2, which for me, it was looking interesting to look at an ABC, okay, as explained at the beginning of the stream. I would say, is it still looking okay for that ABC movement to the upside? To look at this as a 3-wave flat and another 3-wave. However, it's just really stretching its legs here to come to the 7/8 Fibonacci and you know, hitting this resistance. At this point, it is becoming a little bit challenging, of course, to say, you know, it's going to reject from this point. When you have increasing volume, you just need to understand, okay, bulls are winning, right? Bulls are winning here. Preferably you do see a 5-wave move to the downside and a corrective bounce, which we did not get throughout the last rejections. I was hoping for that rejection to be a bit of an impulsive move down, but the reality is it just wasn't happening. So as it wasn't happening, we got the movement here to the upside, squeezing very aggressively. And this is the problem at the moment for the bears, right? If you are looking for a lower high, and this is just really pushing out with volume, we don't have a solid reason at this point after getting above the golden pocket. You know, the only zone of resistance that we have in this zone is the 93.7k area. So the 93.7k area here is literally where we have the 7/8 Fibonacci. We've got a naked point of control from this zone. I think we could get some reaction at this zone, but if the reaction is going to form a little bit of a flag, right, and another 3-wave move to the downside, you know, then this is probably it. That's your 1-2, 1-2, your 3, 4, and, you know, your 4-5, 4-5, and you end up forming a pretty solid, you know, impulsive move here to the upside. But yeah, this is where we do have a little bit of resistance at the moment, which is the 7/8 Fibonacci. A daily level hasn't been tapped yet. A naked point of control at 93.7k, and the yearly level, which we do have, kind of getting above at the moment, right? We had a nice fresh yearly level that did get a little reaction here just a couple of weeks ago, bounced as support, then we lost it. Then, you know, at the moment we are attempting to get back above the level here. So let's go right away through the comment section and say hello to the beautiful community. But I have to say, there's no easy sniper short or any easy scalp trade at the moment with this movement up. The problem with wave 3s, you need to see a stop, right? You need to see exhaustion. You need to see a rejection, because wave threes can be very, very unpredictable. I mean, getting into a short exactly at the level of resistance, I mean, you can always attempt, the possible entry at a level of resistance. In this case, 7-8 Fibonacci is literally the level that we are getting a reaction. We got a little reaction at the golden pocket of $500-600. We got the 7-8 Fibonacci here, getting a little reaction. But with increasing volume, there is a kind of a better way of detecting the exhaustion here after getting such a big solid move with high volume, which has the potential of just smacking through here, right? For any new shorts in this zone, right, with increasing volume breakout here, there could be a much better information that can be given it's depending on the price action that could develop, right? So I'm going to explain a little bit of what I would want to see for me to be confident that the price could form a lower high here and could actually get a solid rejection here to the downside, which at the moment is not the case. When you start moving at levels of resistance and hitting the golden pocket, what you do not want to see, if you're feeling a little bit bearish and levels where you could reject from, is the breakout with increasing volume. That's, this is definitely one of those movements that, are intimidating and gives you the possibility of squeezing out to the upside to higher prices. And this is this is the issue with a third wave. The best scenario, and we have a few examples here, is when you get the big move, right? In this case, in the bearish scenario, you got a move down, a little bounce, right? You got a little leg down and a little bounce. As you can see here, there is a big move down with increasing volume, and then the price slows down, forms a little bit of a range. The next movement to the lows is kind of where it becomes interesting, maybe to look for a double bottom or an SFP at certain levels that you have on the chart. So this movement is intimidating eventually when you got that increasing volume and you don't know exactly when it's going to stop. And you can have some levels on the chart, of course, but it's a problem when you have a big move with increasing volume, because it just gives you that follow through potential to go to much lower prices, right? So just imagine that, you're literally at this stage at the moment and you say it's going to bounce, it's going to form a higher low, or it's going to, it's going to bounce out the golden pocket. When you have that movement down with increasing volume, it's literally, a little bit of a danger area if you're looking for longs, because there will be a moment that it slows down and possibly tests the lows. Yesterday we had something very, very similar here, coming down to this zone where, on the live stream yesterday, this was a very, very interesting zone to look for a long, either an SFP from this low or either an SFP from this low over here. And, as you got the movement down with high volume, so you got the first leg down, you got the bounce, then you got this increasing amount of volume to the downside, and then you have this little bit of a rangy structure. This is like the golden ticket right there to understand that you've slowed down, right? So at this point, if the price really does slow down, or gets or gets an impulsive move to the downside, then the bounce is going to be looking very, very attractive. Okay, if it does get a very strong, solid rejection, then the bounce is looking very, very good at this point. Then I would say, okay, the bears definitely have a chance, because this is the kind of movement that you want to see the bulls just go, right? Any solid rejections or any flags that are formed here then you're looking for the 4 and 5, then it's looking interesting for the short on the kind of the 5th wave after you formed a 4th wave. So yeah, basically once the price slows down a bit, you know, after the big movement, once it slows down, that's the moment that you realize, okay, well, you know, the 3rd wave hasn't been that powerful in the end, and that's where the price could literally get a little bit exhausted on the next movement. This is where it looks interesting for the local double top after a big move up with high volume. When you get that correction, when you consolidate and get a correction, then, and wave 4s are usually a little bit longer, right? In this case, for example, where you have that 1, 2, 3, 4, a little bit of sideways momentum, and then you take out the low. All right, you got that 5 waver here. Well, in this scenario, unfortunately, you do have the possibility, of course, of forming a wave 1, wave 2, another wave 1, and another wave 2. You got your wave 3, and then if you do consolidate from this area, then yes, you can take out the highs, reject, but ultimately this rejection is going to form another higher low, and then just take out the highs again. Just because you have a double 1-2 potential here, once you have increasing volume on the biggest move, you can have a double 4-5, right? Because you have a double 1-2 and you have a double 4-5 here, which is after the price action with increasing volume. And that's only if you start correcting right now. Only if you start getting a little bit of a correction here in this zone, that's the moment that you can say that, okay, the wave 3 has finished. You know, your wave 3 here has finished because it's slowed down and it's correcting here for the next coming hours. So that's when you know that this is, you know, getting exhausted, and you're possibly looking for that reversal move to the downside at some point. And double tops, triple tops are looking very, very interesting at this point, of course. Now, on this leg to the upside, it depends on the rejection right now. Are we going to see a rejection that is going to be pretty damn solid and pretty impulsive to the downside? Is it going to be strong in a 5 waver at this point? And the bounce could be looking very, very interesting, at least for me to look for shorts, because I would be targeting eventually the lows at $89,000. However, the fact that you're looking for a bit of a sniper short here, if you are happy to take the risk on the short, you know, somewhere in this region, and put stop loss at the high, and you're targeting minus 89k, or you're happy to enter and speculate on that lower high in this region, you do not want the bulls to take out 94.8k. So if anybody's happy with that, you just need to manage risk. You need to be very, very emotional about, you know, this is going to be the short of my life. I'm going to risk, you know, half of my account. It would be one possible swing trade that could happen eventually, because the bears really want to defend this zone. However, with that increasing amount of volume on the movement up, it makes it a little bit challenging. It makes it a little bit challenging, of course, to say, you know, this is moved with a bit of power. If we are going to, you know, reject here and form a very choppy corrective structure, you understand that, you know, there's again high probability to take out the highs again, right? However, if that is the case, this is the zone that it becomes a little bit more interesting to look for the shorts on the 5th wave, right? After a 3rd wave and you form a 4th wave, after the increasing volume, which you want in this wave, which is this wave, obviously, that's the end stages, right? The end stages tap the high of the 3rd wave, and that's where you're looking for the double top or triple top if you were to form another 4 and 5. Which we have many, many examples, of course. Now, if this were to get a very, very strong rejection, we would have to potentially count this as an expanding fifth wave in this movement. If the rejection is going to be very, very powerful, which would be relatively bearish in my case, because in this case, so yeah, the bears want to see at this point, a rejection literally coming all the way down at $91,700. This is like the best level to be hit right now for the bears, which is $1,500 away at the moment. So we've pushed up with high volume, but if we were to take out those lows, that would be obviously very, very good for the bearish case to take out $89,000. And there's a main reason why here. Let me just go through here on the on those scenarios. If we wanted to count this movement to the upside, okay, if we wanted to count all of this movement to the upside, in a WXY here, where you have a 3-wave move up, a flat in your wave X, and this is your 1, 2, 3. It is pushing through, I have to say. You know, it is pushing through with a lot of volume. The bears literally need to, it's literally at the 1, 2, 3, 6 extension at the moment, which is where it's dancing a little bit, getting a little bit of a reaction. But yeah, it's not looking pretty for the bears, unless we're going to get a rejection here at this zone that really rolls over with an impulse and actually gets above this last higher low of the bullish market structure. Then I would say, okay, you know, probabilities are very, very high to take out this low at some point, right? Looking for the full-on reversal to come and take out here. We'll be looking at this as a wave 1, a wave 2, right? Wave 3, 4, and 5, right? Get down below $89,000. But that is not the case eventually, right? At this moment, with the increasing amount of volume here to the upside, heading to this zone. So, yeah, only a few scenarios here available for a solid short position, I would say, at this point with increasing volume, would only be a confirmation of a movement down, of a 5-wave move down to take out this higher low. That's the moment that things are going to be looking great, and the bounce is going to, you know, that's when you realize that this momentum has failed. When you have the movement with increasing volume, you either want follow through, or you either want the 4, 5, 4, and 5, right? You want those 4 5s to build up here. And the moment, if you have increasing volume, that you get a solid rejection here, say throughout today and tomorrow, right? And it does look very impulsive. You take out the last higher low, which is the level where you have increasing volume. The big move with increasing volume, you want it to maintain and to form either 4 5s or actually continue the third wave up. You either continue up, or you have shallow corrections and you continue up, right, to form a couple of more 4 5s into resistance maybe. And that's where it becomes interesting for the short position, of course, where you realize that the biggest move has already happened. And this is a similar explanation that we had on yesterday's long potential from this zone on the live stream, where it's you know, we were coming in at the valley area low of this zone, and this is as we were doing the live stream, we're coming in here at the valley area low, and the big move already happened throughout Monday. from 92k. So the big movement here already happened. And when you slow down after the big move with increasing volume, of course it wasn't that huge when you compare it to the bounce, but it was large yesterday before getting this volume. You realize that, you know, breaking down here massively to get a big follow through is low probability. Once you get the stop of a few hours, right, in a range after the big movement, right? This was explained yesterday that, you know, this low or this low is kind of looking attractive for the SFP here, because you already had the big movement here to the downside happening, and getting a fourth wave, very likely a fourth wave, and a fifth wave. You know, getting a big wave here is just unlikely. So this is like becoming a, okay, SFP here, or SFP here. It's kind of looking interesting for the entry to get into that bounce. So yeah, just moving forward with this price action, if we zoom in ever so slightly, from this low is where it's becoming important right now, where you have this being a possible wave 1, wave 2. There is a way of counting 1, 2, 3, 4, 5 from here, unless you have a 1, 2, 3, 4 and 5. Fifth wave is an extension here. Let me just double check on this, which is very much possible. Yeah, fifth wave, a fifth wave extension, it's a possibility. But anyway, if it's not a fifth wave, and it is a third wave, the moment you start stopping in this zone, if you form a 3-wave corrective structure and you start overlapping and bouncing, you know, you're looking to take out the highs. But this is the moment that it is looking very interesting to look for shorts, because your biggest move and the biggest power happened in this price action that we've had throughout today, right? That has been the most powerful move at the moment, right, with high volume. And this is why once you get that shallow little range and then take out the possible highs, I mean, you're looking literally at either SFPs or levels of resistance, the daily, the naked point of control at 93.765, SFP, right, where you have these lower highs. That's interesting for an SFP. If you get a little consolidation right over here and you take out the local highs for the wave 5, right, you could form another 4 and 5 just because you have a possible 1, 2 here and another 1 and 2. So shorts are looking relatively attractive once you get the 4th wave developed and you take out the highs later on. And you're looking for the SFP entries at solid levels of resistance. And I mean, this explanation into resistance is literally very, very similar to this one, right? That we did talk about on the live stream yesterday, as in, you know, this could be a long entry. Shorts were not looking too attractive with this very strong move up, because you literally want to see a 3-waver and then, you know, decide if the 3rd wave is going to be a possible short or not. But when you get this solid bounce, very, very fresh in one wave, it's just like, this is not stopping, right? You want to see a little bit of a rangy bounce from this point that looks corrective to say, right, we've got a probability here that we're going to roll over, but not on the first move up. Like boom, 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 boom. Like, this is like really, really fresh. We need to like chill out here for a little bit to really say, okay, this is looking very, very poor, very corrective, you know, looking for a rollover, which was not the case. We, you know, got a pretty strong rally. But anyway, that's not the point here. The point is, you know, talking about this leg up, right? Is it going to be an impulse? Is it going to be a 3-4-5, 4-5 right now, as there is the potential of a double 1-2? And of course, you don't want overlap in this case from this pivot. This is very, very important right there. Ultimate confirmation level that this will be looking bearish is this higher low because that's the moment that you break the bullish market structure. If this is the end of either a WXY or it's a 1-2, and you have 1-2 here, and you have another 1 and 2, if you come down to take out this low after this leg to the upside, I have to say that will be quite bearish. That would be quite a bearish move here, to probably take out, or to look to possibly take out in the coming days below 89k. So yeah, the sign of weakness at the moment for the bears, kind of almost a confirmation level, would be 91.7 at this point, which is the last higher low of this structure. If the bulls fail to continue the high volume momentum in that wave 3, or at least follow through here with 4-5, right, where that's the moment that you're looking for a move down. But regardless, you're looking for that that continuation of 4-5s, just so you can label this as an impulse. So anyway, if you do come down right at this moment in time to get below this pivot with the increased amount of volume that we've had in this movement, it's already not the greatest sign, because if this were to be a 1-2 and a 1-2, your wave 3, you want follow through and you want shallow 4s and 5s. Okay, you want shallow 4s and 5s. So if you were to overlap right now at this moment after the high volume move to the upside, this pivot low, this pivot at 92.5k, is not going to be looking too great, unless this would be another 1-2. But just because you have the highest amount of volume, it wouldn't be looking too great for another 1-2, even though it still could. Ultimate confirmation here for the bears would be taking out $91,700, which is this higher low over here. Anyway, let's go quickly through the comment section right away and say hello to the beautiful community and see what's going on. Okay, I'm just going to see how many likes we do have on the stream today. Yeah, if you miss if you wait for confirmation, then you miss the short. Not really, because the confirmation, this is like we talk about here many times on the stream, which is, I mean, it really depends on your trading style as well. Are you looking for scalps? Are you looking for swings? Are you looking for day trade setups? It really depends, because I know people are eager to look for a quick trade, right? A quick scalp, a quick movement, right? And wanting to get into a quick trade directly, right? And then there's other people that are, such as myself as well, that want to be a little bit more chilled and looking for more day trade to swing trade, which is just like waiting for the movement, waiting for the bigger move. But what we've been talking about throughout the stream, in the last and well, many times in the last few months and weeks, that there's two ways of trading, literally. There's the aggressive way, which is catching the high or catching the low, right? That's like when it's pretty interesting when you see the different people. Of course, I'm okay with that. Last week, I looked to catch this SFP, right? There is two ways of waiting for a setup. There's literally two ways of trading. There's no more. And I can give you them, right? It's just you catch the exact level where there is confluence for the reaction, and you execute it, and then you literally take the hit or take the profit, depending if it does reject or if it does move against you and hits your stop loss, or you wait for a confirmation movement, which you need to be waiting patiently for. And And I like that comment because let me just go around the table as we do get the like button. I'm going to get a drink of water, guys, because I'm super dry here. And let's do a like recount. But I want to give that explanation, of course, for the education. And let me just have a drink of water while I go around and check the like button. We've got 120 likes, guys. Come on, let's get that like button rolling. Vamos. Yeah, all right, let me just let me go through the confirmation. Just sending here the a message to the legends guys. Going to cut the short trade in a loss here because I'm in a short position. I'm rather wait for a confirmation. Entered a short position in this territory at the just slightly below the golden pocket, and it was a bit more of a swing trade, risking 1%. I'll be happy to cut the loss at 0.5%. At this moment, getting 6k out of the trade, and just to cut the loss because it is looking a little bit powerful at the moment, and there will be time to enter a short, right? It's all understanding as well when to cut the loss as well. I'm not happy to be in that swing short because for me the idea here was looking for a short position in this zone, stop loss at the high, and look not only for $89,000, risk to reward is not that great, like almost a 2-to-1 risk to reward, but still risking 1%. And if we do see weakness, or if we do see power from the bulls here, I'm either going to cut the loss here, and because there's two ways of adding to this position. Moving up, hitting the golden pocket, and then getting the movement down in an impulse, and then obviously saying, okay, I'm gonna, I want to add to this position pretty strongly, because I do believe that put stop loss at the last lower high, and then you have a pretty solid average entry zone on the bounce. Your stop loss lowers to this pivot, and you're still targeting the lows of 89k, and maybe even lower if it decides that it wants to break down, pretty aggressively later on. But if price goes against you with high volume and you realize that the movements down have been very, very corrective, we are coming into resistance. However, I would be happy to execute a new trade setup. If we do, and it's not all green, guys. I wish every day would be green, but it's not the case. I had to cut a trade loss at the moment, right? It's not always green. It's all about management, and it's all about realizing, okay, when the price is, not rejecting where you wanted it to reject. And I took this as a swing trade, so I wasn't looking for any intraday setups in this zone. As in a short or a long, right? I was looking for the possibility of forming a lower high. But as we get the breakout with high volume, you just need to realize that the bulls are winning at the moment, right? The bulls are winning. And someone was saying here, what about a double top? Someone was saying here about if you wait for the confirmation, and this is extremely interesting, guys, because I have, I do have an example of this long trade that was taken on stream last Thursday, which was an SFP. And I love SFPs because I'm just more of a sniper trader when it comes to SFPs. They are very, very nice if you do realize you have advantage on that possible SFP. Not every pivot is a good SFP, but this, we had a lot of confluence here. When we zoom out at that zone, we were hitting the last Thursday, the golden pocket from the lows here to the highs, right? That's where we bounced. from all of this rally, right? Because all of this, you got a big consolidation right there. So the lows of this zone before this rally starts, golden pocket got the bounce. So there was confluence here. The 382 Fibonacci from the lows to the highs, right? And this is just explaining a little bit of, you either catch the low or catch the high for the short, or you wait for a sign of weakness or a sign of strength in the case of the bulls, and then the corrective move. There's literally these only two ways on how to trade. Catching lows and highs can be dangerous if you don't know how to manage risk and you're not cutting losses. If you're adding to the position and you like get into this spiral of, oh my God, it's against me, I'm in a loss, I'm going to add to the position, what should I do, right? Because we've been there, and you might be there as well. If it goes against me, I see the probabilities are against me, I'll cut the loss, right? Just like, you know, I'm out of this trade. It's not worth it. So the management is very, very good. It needs to be good when you realize that the trade is going against you, right? It's like, cut the loss, that's it. You know, it didn't work out, move to the next one before things get nasty, or you decide to add to the position, or let's hope that it's going to reversal. And if that's not the case, well, then if you're adding to the position, it's going to go against you. Then obviously you're in trouble, right? You're in trouble because you don't know when it's going to stop, right? There will be those moments in Bitcoin where you think it's going to reverse, or you think it's going to bounce, and it ends up getting the big breakout. It ends up really having the big move. And that's when all of the trading grid bots, right, really, really struggle, which is very, very... Grid bots and rangers do absolutely wonderful, right? So grid bots here were absolutely nailing the trades because they literally have massive buy orders at the lows and massive short orders at the highs. Once you get the volatile move, I can tell you a grid bot loses. I've tried many grid bots before. Greed bots, I was going to say. Grid bots before. Every time it has a volatile move out of the range, a breakout literally, the grid bot loses. It's math. It's simple, because a grid bot, what it does, it just stacks a huge amount of shorts and it stacks a huge amount of longs. And every time it hits the longs, and then it sells, and it longs and it sells. But the moment you move in a breakout, it's just going to get caught by buying the breakout, right? And I've tested many, guys. I've tested many. Obviously, you can you know, use some settings as well to say you're in favor of the grid bot to buy more than sell more, because you're feeling bullish, and obviously it will buy more at the lows than sell at the lows. There's many ways of setting the bot as well, but when it gets the breakout, the bot doesn't have any brain to realize the probability. It's literally just going to buy at the lows, or short at the highs. So I'm not really in favor. How do you cut the loss? You cut the loss by closing the position before it hits stop loss, basically. Beth Maria Vallejos. So anyway, let's go. So anyway, going through going through what I was going to say right now. Oh yeah, about this long trade that was taken on stream. I didn't get in the long trade from here that was mentioned yesterday at 90,100 approximately, which was the scenario of moving down in a 5-wave structure, right? And the 5th wave forming either an SFP from here or from here, right? And looking for just a little bounce. I was already in a long from this one, compounding into that long. But what somebody was saying about, let's go straight to the point here, about you either catch the low or catch the high, right? which is the more aggressive way of trading. I like these kind of trades because if you manage them very, very carefully, they just give you a very, very good execution. The trade idea of last Thursday was to catch this swing failure pattern where your stop loss has to go beneath the low, right? Then you're looking for the VWAP or whatever, right? A 2-3 to 1 risk to reward. I'm not expecting this movement to the upside. So a lot of the profits are going to be taken already, on the smaller move, but you can compound a little bit, add to that position as the momentum looks okay for the bulls. But that's literally catching an SFP. The main reason we were counting the waves here to the downside, and we realized that this zone, based on this structure on the waves, was looking okay because we had the golden pocket from the lows to the highs of this range. We had the 382 Fibonacci from the overall lows to the highs. Okay. As well, 382 Fibonacci. It was a lot of confluence. Value area high of this trading zone that we had throughout December. Value area high also of this trading zone. Good zone of support to catch an SFP right there. However, you might think, well, yeah, this is an awesome entry, right? Obviously, it is a spectacular entry, right? SFP, you catch the low, stop beneath the low. Once you get that, little reaction at the low, and then, you take some profits and you're a little bit defensive with your stop loss, right? To reduce risk. However, the way to get into a confirmation trade is you can get into the third wave as well. This is the wave that you get into, preferably at the lows, right? On the correction, I'll explain a little bit where the probabilities were high once, with this price action. If you did not catch this long position, you kind of need to catch this long trade right over here. That's confirmation. And how do you detect this confirmation? Where you get the rally to the upside and the movement down, you need to detect it that it is a correction. So it's going to be very, very hard to jump into this long position, right? There's no way I could jump into this long position. It's just it's not there's no trade here for me in this volatile move down. But where it becomes interesting is the moment you detect that this is a three-wave structure is with this price action. So where you are potentially going to long is somewhere in this correction, in this one right there, because here is where you have the highs right there. You get the movement down, you get a little bit of a bit of a correction here, right? A bit of sideways momentum, and then you get the big move, right? The third wave. The third wave, you want follow through and a 4 and a 5, right? You want that follow through in that 5-wave structure. When you move down here in the third wave and you get a bounce that overlaps the pivot low here, which it did, that's the moment that this automatically converts into a high probability 3-wave structure, right? After getting the third wave down, you bounce and you overlap that pivot low, and wave 4 cannot overlap the pivot here of your wave 1. So this cannot be a wave 1, a wave 2, a wave 3, and a wave 4, because you overlapped here on that bounce. So this is your decision. Are you going to take the long? And to stay on the safer side, your stop loss literally needs to come down to the low. The risk to reward is not that great. Okay, it's not that great. However, it's not all trades need to be a 10-to-1 risk reward. They don't need to be a 7-to-1 risk reward. Sometimes they're a 2-to-1 risk reward, 1.5. but these ones usually give you a little bit of more confirmation, right? So in this case, you know, you're either catching the SFP for the bounce. You don't know how this trade is going to develop in the next coming days, right? At the moment it is, you know, moving up. Well, you just add to the position, you just manage that trade as you go along. But if you did not catch this one, where you want to get into the next one, and your target eventually is the highs, you know, what you would want to see here is follow through. If it doesn't, you're just forming a big range, and, you know, we'll see what happens next. But talking about locally here on how to get into the confirmation trade, and if this were to move, you know, if this is moving up very aggressively with high volume, you know, it's literally very, very hard, unless you have a very, very solid level of resistance that you're confident about when you're moving up with high volume, which is the case right now for Bitcoin, right? Volume is increasing. The price did not want to reject, and you're having increasing volume that has the potential of forming a wave 3 until you get a solid sideways correction that you would label as your wave 4 after having increasing volume, or you just continue the wave 3, right? If this is not going to stop here for a couple of hours where you can label a wave 4, it's probably just going to continue rallying, right? You just don't know when it's going to stop. And this is why trying to short at this moment at levels of resistance with increasing volume, it makes it a little bit dangerous, right? You know, I realize, you know, I was happy to get into this short position later on today, based on, okay, you know, if this is going to be a correction, it kind of really needs to top out in this region. Right, you want to start seeing the market move down aggressively, and the movements down were not looking too promising. And then you get the pop with increasing volume. You realize the risk that there is of, you know, the probabilities are increasing for the bulls to really push through here to maybe take out the highs maybe by tonight. And this is why, you know, it's one of those trades that, you know, if you're in a short, you're in a slight loss, you want to cut it because it's looking powerful. Now, yes, the price could reject at this point. Okay, it could reject at this point. And you say, oh, you know, you missed a short position, right? We did hit the point of control in the daily, and it did reject at the 7/8 Fibonacci, right? And you missed the short. Well, yeah, but it's not a very high probability short position. I was already in the short, so I had to cut losses on that short position, just because I don't like this movement with high volume that has the potential of moving in a wave 3, right? And you don't know when that wave 3 could finish. The moment that you have high volume, you need to wait for the price to chillax. Once it chillaxes, that's the moment that it's looking like it's gonna correct down after a big move with high volume. And where could it stop? You know, I've seen wave 3s to hit the 3.618 extension of your wave 1, right where they absolutely moon. So this is the situation at the moment, with this being a possible wave 3. You know, it's just give priority to the bulls, let them go where they need to go. There will be in the next coming days, there will be a little bit of more clarity, of course, once you start seeing the slowdown. So your wave 4, then another wave 5, and then that might be the one that does get a rejection. Maybe this continues to the upside, pops out above 95k, and then your wave 4s are going to be here. Yeah, you get your wave 4 and then your wave 5, and then your wave 4 and another wave 5, because you possibly have a 1-2, 1-2. Your third wave is extremely explosive. It gets well beyond 95k plus, and that is the moment that looks interesting for the reversal, as the biggest move happened here in the middle with high volume. That's the moment you're getting exhausted, And then you want to look for levels of resistance all the way up here, regardless if you have a weekly naked point of control, which is the case at 95.7, or at 96.9, you got a naked point of control as well. So that's kind of more interesting to look for the shorts instead of trying to short when the price is moving up aggressively with high volume in this case. So anyway, let's go right away. I'm really sorry to hear about your loss. I mean, that's totally fine, man. We can't win them all, right? We can't win them all. This is the thing. And you know, getting stop losses, you need to be transparent about it. You know, we've got a community, of course, that we talk about it, and it's okay as long as you manage risk and you're not burning your account and you're realizing where, you know, it's not you know, the price is going against you. Trade long. When I trade BTC, stop loss is maximum $400 tether away from my position. Well, that's it. That's risk management, right? So yeah, but yeah, people forget, right? My bro Kenya Epa, who's this? I was going to long on the 8th, and I waited too long. Now have to wait. Currently trading BTC, ETF, BTC. Good to know. Your mum is in Sri Lanka. Who the heck is that? Greetings from Sri Lanka. Much love to everybody. I haven't gone through the comment section. Up or down? Like button is bearish. Come on, guys. Vamos. Mariela, much love to you. Thank you very much for the kind support here. Got Mariela giving some love and support here as always. Meme cat. Why bring up some dollars altcoins when we are making bucks on Bitty? The bears ate alts for breakfast. They did. Let's go here through the comment section. I think I neglected the cup and handle on the 1 daily time frame. It looked too easy, says Paz Maria Vallejos. Cup and handle on the daily. Cup and handle on the daily. Right, or on the 4 hourly time frame, right? Yeah, you got a Sammy cup in handy here, right? A little bit of a Sammy cup in handy. I guess it's this one right over here. Bit of a cup and handle situation. Anyway, let's go through classic price manipulation before the FOMC decision. FOMC. This pump won't sustain for long. Good level for swing shorts towards 89k liquidity. Yeah, there's no doubt. Parkash, Andy, my brother, thank you for the great learning. How do you take entries with such low risk? Is there something you developed over time, or is it because of Elliot Wave analysis? Cup and handle can fail, absolutely. The risk management it really depends on your account. You know, I usually risk between 1% and 2% if I feel very confident in a trade where I can risk 3%, which is like my max that I would risk from my trading funds or my trading account. I would have to be very, very confident in, you know, if I'm risking over 3% on the trade setup. So yeah, I had a 1% risk, right, on a short position. I had to close down. You know, I'm not interested in chasing, you know, the price action against me and adding to shorts or any of that nonsense. Realizing that there will be more clarity in the next coming days, and you know, that trade I will probably get in with 1.5%. You know, I had to take a 0.5% loss here at the moment, which was about $6,000. So you know, I had to take the loss on that movement, which is fine. You know, everything is, you know, this is part of the game. As long as you can manage risk, and if you don't like the trade, you just need to cut losses, right? I had some awesome last couple of weeks with you know, shorts and longs, and sometimes you just need to take a loss a couple of times a month, right? They can't be all winners. So yeah, that's a little bit of what it is. Now, on the bearish side of things, you know, because I'm not interested in longing all the way up here, that is for sure. Don't want to get into the short as of yet. And this is the thing, right? We just probably just almost tap that point of control from this range at the moment. As explained, I will be happy to join a short position if we lose this higher low at 91.7. So if we lose that low, okay, and this is all about that confirmation that was explained from this trade right over here. By the way, guys, I forgot to say, you got that insane deal at the moment of 30 days free trial. It's not only myself, you have Devil and the rest of the coaches there as well, providing daily analysis, possible setups, scenarios. You got great education, great community that is talking in between them and sharing charts and knowledge and different scenarios. There is a 30-day trial for free, okay? And you also get the trading book, which gives you a lot of information on how to detect the market structure and high probability setups. It's an ebook that myself and Devil have been working on the last few months that you get for free. You just need to send me the word promo on the Telegram and follow the instructions, and you can get in 30 days in the community, basically, guys. Okay, we've been working on this community for the last few months. We put a lot of work and effort and trying to be the best of the best. So you got your chance right now to get in for 30 days. Just send promo here in the Telegram and we can jump you in, guys. Let's go right away through where I would be confident in taking a short. Where would I be confident in taking a short after this, you know, after the first attempt, which was a failed one? And it's all about, and this was a swing short, right? My idea here was to really come down, you know, none of these little day trade scalps, right? I'm not interested in these little movements. I'm interested in the bigger moves. So, you know, when can I be confident in this bigger move to get below $89,000, right? Because it is not only 89. I mean, this would be the first target, regardless if it loses that level later on, then we would have to hold on into that position as well, take some profits, add to the position, just literally like this long trade that I took here, that I have to, you know, that I'm compounding in, and obviously taking some profits as well, as we get the movements to the upside. But that literally has been compounding. When you get the information on the chart, you realize that a new higher low can be formed, right? So my current entry at the moment is where these higher lows are, because I've been adding ever so slightly, realizing the potential of the bulls to snap out from this zone. And obviously you want to maximize profits. If you're short from here, if you're long from here, and I've taken most of the profits here, right? Say give or take 60%. And I'm still in that position here, you realize how you can not only take out this high, but if you're forming corrective structures down, I'm happy to add to this position and ride the momentum to the upside. So currently that position from last Thursday, I've been compounding in ever so slightly. Obviously it's managing as a hedge against the stop loss of today, managing as a hedge. You know, and just maximizing to see if you get that breakout to the upside. So, you know, I'm very much interested in the short, but at this point with the breakout with high volume, you know, I realize that I don't have strong probabilities at the moment with the short. Yeah, hitting the golden pocket was all fine, was all good. You know, you need to give it a chance if you want to try and catch the Pico top. If the price does start rejecting later on in the next coming days, then it's like, yeah, you know, I catch the ultimate high level, which is all good and fancy, but the trying to catch the highs or the lows brings its risks, right? It brings its risks, of course, of, you know, basically the price breaking out, right? Breaking out against you. And obviously, if you have a swing trade, mine was a swing trade. My stop loss was the highs, but decided to cut losses. Just not worth it here with this momentum to the upside with high volume. So it was a bigger, I was looking for a bigger swing here to take out 89k. But with that day trade to swing trade scenario here, where would I be confident to say, okay, now I want to get into a new short position because I'm no longer interested in shorts at the moment, I have to say, with this new information with high volume. There's two ways on how I would want to approach the short here. If we consolidate here without taking out the highs of 94,000.8, I think it is. Let me just double check. I'm just going to explain a little bit what I want to see on the price action for me to get into a new short. Because at the moment, I'm not interested. Would be happy just to maintain long positions. If we do not, if we do manage to not take out this high, preferably, at least for me here, and the price gets a little bit of a consolidation in the next coming hours, okay, gets a little bit of a flag, right, situation here, a little bit of a consolidation after a high volume move, you always need to consider the wave 4 potential, especially when you have a possible 1-2 and another 1 and 2. Then you want to consider the wave 4. If you start ranging here, and most importantly, not overlap the wave 1, which is right over here. So this would be the green light for the bears. If you take out that higher low at this moment on a rejection in the next coming hours between today and tomorrow. So there's two scenarios here that I would be looking at. Price slows down in the last few hours, preferably bouncing either at the 382 or the 50% Fibonacci, which is sitting in between 92.9, 92.7. And manages to form another push to the upside. This push to the upside is where it becomes interesting for me to take a short position. Not the one with increasing volume, because I don't know where this is going to stop. For the moment, it is stopping here a little bit, but it's not enough for me to say, okay, you know, it's going to roll over. So it needs a slowdown of a few hours easily. This is not enough of a slowdown because, you know, maybe volume increases here, right? It doesn't look like it. It's getting a stop and it looks like it wants to roll over. But the safest way, at least for me to realize where the probabilities are, is looking for that fourth wave. Get the stop. Because after a big high volume move, you know, you're going to get a stop at some point, which you're going to try and label as a wave 4. That wave 4, then later on, obviously you're looking for the wave 5. Now, because you have the potential here of having double 1-2, the possibility of forming a 4 and a 5 and another 4 and a 5, which the second fourth wave usually forms a higher low from your previous fourth. Just like the 1-2s form a higher low, your 4 and 5 here also forms most commonly a higher low as well, your second fourth wave from your first fourth wave. This is the moment that I'm interested in looking at the short position at levels of confluence, which would be in this case, you know, the point of control or the daily, or, you know, which is at 93.9k point of control, which is at, you know, just almost scratching it at the moment. So if it's not going to be this fifth wave, after forming a consolidation, most importantly, right, you need a consolidation of a few hours here to label as a wave 4. Wave 4s are usually longer than wave 2s, and they're usually a bit rangy. So you need a little bit of a range here to have on the formation. And then the fifth wave, at levels of confluence, there's a daily, there's a point of control, is where it looks attractive to attempt the short position. And that's, you know, you might have one more time, which is that cheeky double triple top, right, before you get the rollover, right? It's kind of the cheeky squeezing out the short that are entering before it gets the big move down, right, which you would expect as a 5-wave mover to the downside, right? They come fast, right? When the price wants to reject, they come fast, and the best way to detect it is looking at this 4-5 and only main reason why it becomes very, very lucrative and interesting to short at levels of resistance when you have the 4 and 5 is because the biggest move has already happened with the highest amount of volume, right, from the last few days of this uptrend. So the moment the big volume stops and getting continuation and you range, that's the moment where you're looking for the 4-5s into resistance, to get that rejection. So where would I look for my short? Price needs to stop, it needs to range. Once it ranges for a few hours and you can see that range without overlapping this pivot at 92.5, because that's your second wave 1. You don't want a wave 4 overlapping your wave 1. You want it to consolidate above that level. Not that I'm interested in longs, I'm interested in the shorts after the 4th, 5th wave. The 5th wave is where I want to get into the short position at levels of resistance, of confluence. Long in a wave 4 is a little bit is challenging. I wouldn't say after a big move like this where we've been rallying, looking for longs up here is just not ideal, even though you take out the highs. I mean, if you can detect them, then it's all good, it's all fine. But at this point, longs were interesting, last week. Longs were interesting somewhere in this region, right? Maybe long in here yesterday on that bounce of the point of control of the range to take out the local highs. But when you get the big move with high volume, longs are not looking too attractive. Shorts are looking more attractive eventually. And this is the way of trying to detect it safely. So one of the scenarios that I would be looking for is, you consolidate a little bit for the wave 4 and then the wave 5 into levels of resistance. The daily, naked point of control, that's where it becomes interesting to look for the double tops or the SFPs, right? The failed breakouts at the confluence levels. You can get into a short right now and it might play out, right? But the whole thing here about having a high volume move to the upside is that you can get continuation to the upside. It can continue to the upside very aggressively. So that would be one way on how to detect the short position here for me. Another way, which I would not catch the Pico top, is if we do reject from here without forming the 4-5s as explained, right? A little bit of a range, boom, 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 right? You get that exhaustion after the big wave with high volume. That's what you want to see, right, in the next coming hours. So far it is stopping a little bit, so you want a bit of a large range here. And then the double triple tops are looking interesting for the short trade. What if the price rejects from here? I missed out shorting because of your nonsense of your 4 and 5 and the price just dumped, right? The price just dumped. I should have just taken the short instead of waiting for the exhaustion, as you mentioned. Well, that's one way, right? That's one way. There's the risky way, which is, you want to take the short now? Well, go ahead and take it, right? Put your stop loss wherever you want. Do you want to put it at the highs, or you don't want to have a stop loss? That's all on you eventually. But trading, obviously, you want to see a higher probability trade setups, right, developing. And when you got a movement here with high volume, you just want to realize that, okay, it's just not the best at this exact moment to take that decision short because it's very, very fresh. So the other scenario, instead of getting that, 4 and 5, right, and 4 and 5 into levels of resistance, of confluence, which is the point of control or the daily that we have up there as well. 0.88 points, preferably the 0.8 Fibonacci. 88 Fibonacci is not hit, preferably. Then if you don't get this exhaustion and a little consolidation, and the price just moves down very aggressively. The moment that it looks interesting is as soon as you cross this pivot high, because in this case, with the highest amount of volume that you have here, from these lows, as explained, this is just very noisy. This could be the 1-2 or a WXY. Okay, right over here. The important movement starts from here, which is another 1 and 2, because there's no third wave from here. There's no 1, 2, 3. You know, this is another 1 and 2. So the start of the move is preferably from this point here of yesterday at 90k. It's because you got a small movement, correction, a small movement and a correction, right? There's no third wave here. There's no nothing. So this is where the movement needs to start with very strong power in the wave 3 and either 4 and 5, 4 and 5, or continue the wave 3, right? Continue that momentum here. There's no corrections. It just gets a little bit of volatility, ultimately continues pushing to the upside. If you overlap that pivot, that's where it's looking interesting for, okay, this no longer is looking like a third wave, because your fourth wave is overlapping your wave 1, your second wave 1 here. And you do not want that. Your third wave does not get overlap from your wave 1. It forms a shallow pullback, commonly to the 382 50% Fibonacci, and then gets the highs taken, right? And another 4 and 5 potentially, because you got a 1, 2, 1, 2. So the moment you come down to overlap 92.5k, you realize, okay, you know, this is probably something else. You know, maybe this is your wave A, wave B, and here you have 1, 2, 3, 4, 5, which would be a C wave, an expanding fifth wave inside of your C wave. So that's A wave, that's B wave, and now you got 1, 2, 3, 4, 5. Your fifth wave ended up being an expanding fifth wave, which is not extremely common. It is more common to get an expanding fifth wave, okay, than an expanding wave 1. Okay, it's much more common an expanding fifth wave than an expanding 1 wave, as long as your third wave is not the smallest. But you know, you would rather label this as a wave 3 until you are proven that it is an expanding fifth wave on this latest move. How would you realize? Well, first of all, you need to cross that pivot, because that literally invalidates this being a wave 3. So the moment you cross this level, this high, ultimately this would be the confirmation at 91,700. That's where I would be more interested in looking for shorts on the bounce. And in a nutshell, looking at the 15-minute, 30-minute, right, maybe 5-minute, what you want to see is a strong move to the downside that looks pretty impulsive, right? Kind of trying to figure out if you do get some kind of a 5-wave move to the downside. This is very nice for a 5-waver, but this ended up being part of a flat, very, very likely. Okay, we got this movement, and this one. But this is what you want to see. A big strong move down, in this case, in a 5-wave structure, where the bounce needs to be overlappy and corrective. So you want to see that push up, down, push up, and then obviously the third wave failing. And that's the moment where it looks extremely interesting to look for the short trade, because you want to get into this wave. I want to get into the third wave, and it doesn't really matter where that fifth wave finishes, really. I mean, if it finishes all the way down here at 91.7, then that would be a better confirmation, hitting this higher low, because then you realize that this is likely a finished move. Then I would start thinking about that ABC here, which extended a little bit more than I expected, with a expanding fifth wave, which they, as they are less probable than a regular expanding third wave in an impulse. you just kind of not expect them that much, as they're not that common, okay? Then just a regular 5 waver where your third wave is the longest, right? This is the most common impulse that there is when you're looking at the chart. Most common 5 wave structure is your third wave being the longest, not the 5th wave being the longest. It happens, but it's not that common. So the moment you overlap this pivot high, you would realize, okay, this could be an expanding 5th wave. And then you can combine that all of this is a 3-wave structure and an ABC. However, your 5th wave was the expanding one, right? Instead of your third one. So the shorts, you know, you're either like Rambo or John Wayne, and you like sniper here, and you shoot. I'm going to short because I want to catch the Pico top. Or you are a little bit more patient and you realize the structure and where the probabilities gain, because hear me out here, if you do take out this area in the next coming hours, say between today and tomorrow, if the price pushes down in an impulsive move, you know, I can tell you already that, you know, this is going to be the important zone. This is going to be the important bounce to literally look for the short, because the price, when it forms a possible larger 3-wave move to the downside, the third wave, this wave right over here, is going to be developed by, you know, most commonly a 5-wave move to the downside. So where we want to get in is on that correction after seeing the sign of weakness, and that's the bullets that I have at the moment with this short. You know, trying to catch the high of the short for that swing trade is all good and it's all nice, but this one didn't work out, right? This one didn't work out. Sometimes we need to show, we need to say, hey, you know, I actually attempted a short scenario here as a swing trade. Could I have held the position? Yeah, but I will make that back if I see the sign of weakness. I can go in aggressively with 2% to take out $89,000 in the next coming days, because I know what I'm looking for on the probability side. I know the signs of weakness here. If the market is, we know that dumps like to happen like staircase up, elevator down. Sometimes they are more aggressive than we think, right? More aggressive than we want. So it's you know, sometimes it's going to be a very, very sharp 3-wave, 5-wave move down. Sometimes it will be a little bit slower. So, I mean, let's see, right? Let's see. But the idea here is to at least cross the 92.5K, because then I realize, okay, this no longer is a third wave. Highest amount of volume. You failed as a third wave continuation and getting 4 and 5. It's failed. It's overlapped your second wave one. You know, that's the moment that it's going to be looking at even more interesting. If you take this higher low, you break the structure, right? Then the bounce is going to be the one that you're looking for the trade. And that is the moment, you know, if you get that 3-waver, then the movement down, this is the moment where it's looking interesting to jump into the short. This would be the aggressive short, try and get into the third wave at the golden pocket 7-8, right? Kind of short trade. Or then there's the confirmation one on the lower time frame, where you actually confirm that the movement up is likely a 3-wave structure, because you're interested in this movement to the downside, right? Then you get your 4 and then your 5th wave down, but you kind of want to be in, you want to be in this wave. This is the most important wave that you want to be in, right? And right now it's just looking a little bit too bullish, right? It's looking too bullish. You have the potential of this still increasing in volume. We've got no solid stop. We've got no solid rejection. You know, market structure is overall, you know, bullish with higher lows. It was all fun and good to see if we'd rejected at the golden pocket here aggressively after CPI or, you know, with New York open. But it's the reality, it's broken out and it's got high volume, and the bulls are winning for the moment, right, till proven otherwise. If we are not going to be taking out, I can tell you now, if we're not going to be taking out 95k in between today and tomorrow, there will be signs of weakness if this structure does not maintain. We don't follow through with the wave 3, 4 and 5 here, or wave 3 continues in the next coming hours, because I'm not labeling this price action currently right now as a wave 4. I mean, this needs to form a little bit of a flag situation. This could still be part of the wave 3, and you just snap out here and in volume increases, right? This is no wave 4 to be labeled, because you want wave 4s similar in time or even longer than your possible wave 2s. So yeah, you can clearly see here right now that it's a very, very shallow move compared to these, right? You want at least this kind of timing in here, which is several hours from now. The moment you have a similar timing on a correction here without overlapping this pivot, right? You've got a similar timing zone before you take out the highs, then that's nice for a wave 4. Wave 2, wave 2, wave 4, another 4 and 5 here could be on the formation before you get the rollover, the bigger move to the downside. So anyway, that's a little bit of the plan here that I would have to be confident in a short, because at this moment, if you're shorting up here with this push up with high volume, it's a bit of hope. It's a bit of hope, right? It's like, I hope it's going to roll over. I think it's going to roll over. You start coming up with this, and this is why it's super important to realize, hey, price moved up. It has increasing volume. You understand the bullish case scenario and when we do Elliot Wave theory and obviously market structure, the most important thing of a trader not only is his risk management, but understand when he is wrong on a trade and the probabilities are no longer in your favor, right? The probabilities are no longer in your favor, and you just realize as a trader, that's the most important thing, when the probabilities are not in your favor, and you just need to cut down on the loss. Most importantly, manage risk, right? Never go with 20-30% of your capital in one trade. So it's just as simple as remaining a little bit patient and understanding that there's going to be a better trade tomorrow. And obviously longing all the way up here is not the deal, right? You should have been longing from the last few days on the higher lows. When you get increasing volume like this, it becomes, when you've had a significant rally in the last few days, it becomes risky, regardless of the levels of resistance that you have, which is a point of control in a daily. It just doesn't, become a sensible short at this moment. Sensible short is, as explained, we need that wave 4, 1 2 1 2 3. This has to stop at one point. It will get a larger stop, and you either form a 4 and a 5 and maybe another 4 and 5, but then it becomes interesting once you formed the sideways momentum, because you realize that all of this could be the impulse, and that's it. You're looking for the rollover on the 5th waves at levels of resistance. Or if you do get a solid rejection, I have to say I missed shorting the high, but I will get into another short on the bounce, on the range, because it's unlikely that it's going to roll over in like this in 10 hours, right? In 5-10 hours, and it just absolutely nukes. It can do that eventually, but you know, on these movements, I'm not interested in participating eventually. Most commonly, you will form some waves. The market moves in waves, right? It moves in waves. So it's unlikely to do this. If it moves down, it's likely going to move down like this, right? It ain't going to move down in a straight line. So it's in our best interest to understand where the market structure breaks, and we're looking for the bounce at levels of resistance at the 50%, 7/8 Fibonacci, and detecting that three-wave overlapping structure, which that's where we want to get in. That's the thing about these bigger moves, right? If you cannot catch the top, kind of with a high probability setup, which would be in this case finishing that, this is wave 3 possibly with that high amount of volume, and you got that, if you cannot catch the wave 5, right, of a movement to the upside to get into the short, just like the long here of that wave 5, we are expecting a small bounce, but if it ends up being a flat, then, well, we go higher. Well, what can we say? But the entry zone was the wave 5 of this movement of yesterday, right? So you don't long, right? And this is like the same explanation for this, guys. I mean, this is the perfect example because we got this price action, and it's not always like that, because there's another movement hiding than you're reading. This could still be an ABC, and this movement to the upside is a 5-wave move from this pivot low, because this is a 3-wave structure. Okay, that's your low. It's a 3-waver from this point, but you have an expanding 5th wave, which is not the most common 5-wave structure. Instead of your wave 3 being the longest, it's your wave 5. It happens, especially if you are going to form a wave C, because it makes it tricky, right? Wave C's, especially in a possible WXY. An expanding 5th wave is actually common in a C wave, just because it kind of traps you into the belief that it could be a 3rd wave. So I'm not labeling out this scenario, but I would rather wait for a confirmation rejection at this point, in a solid impulse down, and then I realize that if you overlap not only this pivot high, but even better if you take out this higher low of today at 91.7, that the probabilities of this being a finished structure to the upside, and the probabilities will significantly increase, okay, drastically, that we are likely going to take out $89,000 if we get this momentum to the downside in an impulse. Some bounce somewhere, preferably after the impulse, at least getting above the 382 Fibonacci, preferably 50% to the golden pocket. We're going to have to see. Is the moment that I want to short with higher probability to come down below sub 89k, and then we'll see, right? Regardless if this ends up being very aggressive and goes to 87, 86, right? But the target would be the lows at least, because this could overall end up in a 3-wave structure on its own, right? When you do zoom out, hang on a minute, let me get all of this drawing out of the way. It must be going absolutely nuts here. When you zooming out, hang on a minute. When you are zooming out here, this is the 4-hourly, considering this structure. You could form, after taking out 89k, a 3-wave structure without taking out the lows, and this ends up being a 3-wave down. It finds support, and then you rally later on, right? And then it's like, oh man, this flag, this range is just getting on my nerves here. But anyway, the first target would be taking out 89k, and I need that impulse down at this point to be confident. that this is going to be a WXY, where you have a zigzag up, you got a flat, and you got this zigzag up, which you would have a 5-wave move with an expanding 5th wave, which is not the most common. It's not easy to detect. It's not, sometimes. This is why today my idea was that the 5th wave, right, was going to get rejected here, which it kind of, we did have a good chance for that to happen, right? The idea was looking at this, rejecting at 92.8, which does happen a lot of the time. You get a 1, 2, 3, 4, and 5. And that's it, right? And this ends up being your 3-wave structure. We did reject, but the rejection was crap. The rejection was corrective, which ended up in a 3-wave structure overlapping. And that's when you realize I could have cut losses much earlier, but I was just happy with, let's see if we take out the highs again and reject, because another 4-5 was possible. But when you zoom in on the 5-minute, and this is where, I need another coffee, right? Sometimes you need another coffee when you're trading. If you're feeling a bit sleepy and I realized that the probabilities were against me on this movement down, which I did forward into the community. I did get that message forward into the community saying, it's not looking too great for the movements down, for the rejection, sorry. And basically the movement here, the movements to the downside were looking extremely corrective. So pointing out, okay, when we are rejecting from the highs, the movements are looking very, very 3-wavy, as you can see here. 3-wave, big bounce, overlapping the pivot low or hitting the golden pocket. 3-wave down, movement up, 3-wave down, and this was the latest one. With this movement that we got, it's already not looking great. The rejections are not great, because you want the 3rd wave to break down. Literally this one, you want this one here to follow through, and it's just very corrective movements down. Once the 3rd wave gets an epic bounce, that's it. It's kind of game over for the bears. So it's this pattern that consistently happens and happens and happens, and you see it on the corrections, which you just see them here. 3-wave down, big bounce, overlapping the pivot low. 3-wave to the downside, you want this one to follow through. 3-wave down, this movement up is already bad sign. That's a bad sign already. That gives probabilities that this is corrective. This movement to the downside, which was the latest one, move down, a little bit of a range, and a movement down. This one is the one that you want follow through, right, to form that 4 and 5, but it fails, and then you get the overlap, right, from all of this consolidation. You do not want to see this getting into the territory of the 3rd wave, right? You don't want to see that, because that it tells you that this is likely corrective. You could give it a chance because it is lower time frame, but regardless, everything's very, very 3-wavy bounce, 3-wavy bounce. Then it's just going to take out the highs again, and there's going to be a moment that you take out the highs with a bit of increasing volume, which is the case. Now, this is a little bit of a bigger range at the moment, but just to not get confusion here or too much on the very, very low time frame, the game plan for me at the moment for this kind of swing trade is really clear. I have it clear right now what I need to see in the next 24 hours, maybe less than that. And that's as explained. I need to see this movement, which has had the highest amount of volume, to either fail, get a quick move down, and you might say, well, I missed out on shorting the Pico top. It doesn't matter, right? If you want a higher probability trade setup, you need to wait for the weakness and realizing that this could be a finished WXY, which we're kind of hitting the 1236 extension from this high to this low. Yeah, 1236 extension, which is, this would be counting this as a WX and a wave Y right there, and your wave Y is a 3-wave structure, but your C wave is, and like I said, this is not the most common thing that happens, right? It's it's not the most common thing that you get an expanding 5th wave. Usually your wave 3 is the longest. So hey, can this be a 1, 2, 3, 4, 5, an expanding 5th wave? Absolutely. The moment I will realize that is what has happened is as soon as the price from this pump with high volume crosses down here in an impulse. So if we get that cross rejection in an impulse down, I will understand that, okay, this is probably finished. And what we're looking for here is the follow through to the downside. And it will be all good. You can get into a short here, in this zone. It doesn't need to be an exact entry. You can give it a bit of room, just manage risk. 2 to 1, 3 to 1 risk reward. You're risking 1% to gain 3. It's but that's where you would increase in probabilities in taking the short instead of trying to catch the high at this moment with the high volume. Because catching the high with high volume means that if the correction is corrective, you're maybe just going to push to higher levels and volume still increases until you do not get the corrective structure in a wave 4 that is similar in size to these corrections. Because at the end of the at the end of the day, guys, I'm just gonna go with the waves here. The idea here the idea here is this. This wave 4, because you have the highest amount of volume and the biggest move from this momentum has been this one with the highest amount of volume, you do not want the correction to overlap the $92,570. The moment you do, then you're not looking at this anymore. And the main reason why you label this is because you have the highest amount of volume. You always want to label the highest amount of volume movement, the biggest movement with big volume, a wave 3, till it actually does not prove itself that it is a wave 3. How does that happen? Well, you need to get back beneath this pivot low. Then you realize that, okay, maybe this has been a 5-wave move and this ends up being that ABC here. So it needs to come down beneath this pivot at a bare minimum, and preferably hit this higher low. Once that if that does happen, you realize that, okay, it's finished. It's a finished move. But this is why also, where would be the most interesting short position? This consolidation is looking pretty good already to start believing it's a wave 4, because it's taking a little bit of time. It's slowing down. Wave 3 really should have had follow through here if you wanted to see higher prices. So it's already slowing down here. So now is the moment that we can start thinking about, we could be on the formation of a wave 4. And if that is the case, well, then you got one more leg here to the upside, which you are going to be looking at 1, 2, 3, 4, 5. Then the little bit longer correction here in time to form the 4 and 5, because all of this is your wave 3. You need a 5-wave move, right, in your wave 3, right, which is the one with the highest amount of volume. So all of this would be your wave 3 right there. because that's your wave 1, 2, wave 3, and then you got another, you still have a 4 in the 5. So that's the moment where it looks interesting for the exhaustion. The 4-5s is the exhaustion, literally. But you're going to take out the highs 1, 2 more times, right? For that 4 and 5. That's the moment where you can hit the daily. You can hit, start getting a reaction at that zone. But that's the exhaustion moment, right? So you start off the rally with some nice power in your wave 1. Then your wave 3. And then you slow down, of course, in your wave 4 and 5. Right? Before you get the reversal. But the big move has happened already, so that's what you would expect. You either look for the 4-5s into the level of resistance, and that's where you look for the possible sniper SFP short position, or as explained, if we do overlap that pivot and you break down, boom boom boom, that's it. That is the golden ticket zone. This for me is the golden ticket zone on the bounce that I would be eyeing very, very carefully, between 50% and the golden pocket of the movement down, which is the common area for your wave 2, to look for that short position, because that's where I would realize, okay, this is looking interesting for a 5 wave down, to take out this low over here. So until we do not get any of this, I cannot, say that this is going to be the high. This is going to be the high. This is going to be the high. I'm going to short here. I'm going to short here. Right? When you have the increasing volume, it's just against my rules here. Despite you do have resistance, you got a daily, you got a point of control, you got a bit of resistance up here. That all nice and good. You can get a little scalp short here, but when I'm talking about the bigger movement down, I need that first move down to hit this zone. I need that movement here, because then I have high probability for this projection, for the bigger move, right, of $3,000-$4,000, not the movements of $1,000, right? So anyway, that's just a little bit here of how I would be approaching the short position, because I'm no longer in the short, and I'm no longer interested in getting into the short position at the moment until we see the wave 4s and 5s, okay, which is what you want to see. You got the first move up, the slowdown, the big move, the slowdown, and then that's it. That's where you look for the 5 wave move to then get the movement down, right? We need the slowdown. We need to take out the highs, correct, right? And after having high volume, that's the moment that you're getting exhaustion. But as it's too fresh with high volume that we just broke out in the last couple of hours, I cannot get into this short position at the moment, because there is some risk to it, right? There is some high risk, and if that does not happen, which would be even better for the bears, if we do not form the 4-5s and 4-5s here throughout today and tomorrow, and we just roll over from here in an impulse, that is going to be even better, because you don't want to finish an impulse from here, because then what you could do is correct if you're feeling bearish. If you get the 4-5s, that means that you have an impulse here, and it means you can correct. If you're feeling very bearish to take out these lows, then you could correct down throughout tomorrow, and then, well, tomorrow, the next couple of days, and then break out later on. So it would be better for the bears to take into consideration the WXY here, where your Y wave is this zigzag with an expanding 5th wave, right, where you got an A, B, and C, right, and your C wave is a 5 wave structure. Preferably, as mentioned, you want to see it finishing here in this zone. You want to see it, getting done with. and an expanding fifth wave. You don't want to see 4-5s being built up here, because that would mean that all of this is likely an impulse. And yeah, what we would be expecting is maybe a bigger move to the upside in the next in the next week, because you could correct here and then you break out very, very aggressively into next week. So the bears don't want to see 4 and 5s here. They don't want to see 4 and 5s because that would be ultimately more bullish. They want to see the fifth wave, this Y wave, sorry, in this WXY. They've got zigzag, a flat, and a zigzag, and this ABC potential. You're literally, you're running out of bullets here for the bears. 1, 2, 3, 4, 5. That's it. Expanding fifth wave. Bears need to start showing themselves right now in the next coming hours without forming a 4, 5, 4 and 5. Because if that's the case, then this would be a bullish impulsive move instead of a 3-wave structure. And what we want to see is a 3-wave structure here for the bears. If that's if you can follow up on that, right? You don't want to see an impulse here, followed by 4 5s. We're looking for a correction. 3-wave up. Anyway, let's go right through the comment section. Maybe a little bit of too much noise here with Elliot Wave theory and the probabilities, just to be confident on that short. I do know, guys, this is kind of very, very speculative. I'm saying, it's going to form a lower high, right? The bulls are going to get steamed out here. They're going to lose steam. But I'm not, this is not it's not my game where we at currently with this high volume spike. I need more information to be confident on that short trade position, because it moved up with higher volume. It's, I'm not participating here on trying to jump into a short at this moment, where we are at the moment. Just not part of the game for me here. So yeah, I wanted to go through a little bit of education as well on what happened on the lower time frame, because I was just checking the chart here on the lower time frame. And if you do enjoy the content, guys, make sure to destroy that like button, guys. Okay, it does take time, of course. I know it might feel boring for a lot of people, but just understanding a little bit where the probabilities increase on your side, right? And when it goes against you. We popped out with a bit of volume here, and I just realized that the momentum is going against you. And much love, Mark Dutch. Here he is, the man himself. I'm just going to take a drink of water, guys, because I'm feeling dry, and go around the table here as we do get that like button destroyed to at least 300, guys. Come on, make sure. Short right now, short or long. Ajugamawai. Much love to you. Mark Dutch, brother, thanks for joining. Volume indicator of you, Andy. What volume indicator? Up more. Thoughts on XMR Monero? I actually hold some XMR, and I'm super happy I did buy some Monero last year. Not that it's up massively, but Monero is doing absolutely wonderful. Wow, holy crap. What happened to Monero? I didn't even check the charts. Yeah, Monero is a great privacy coin. What can we say? Wow, all-time high on Monero. Holy smoke. I'm literally not taking a look at altcoins, but I do have a bunch of Monero. Holy smokes. ICP as well, getting a little push up. Altcoins getting a little bit of a pop. Some altcoins are popping up. I'm literally not checking altcoins. I'm not checking my portfolio. I'm not checking altcoins at all. But it's nice to see Monero, the king of privacy. Obviously, we do know what happened to SEC. ZEC, I did not buy any ZEC just because I thought it was overpriced. But apparently, they had some issues with I don't know. I think it was part of the the team that were leaving or something. I don't know. They were leaving the project. But yeah, this is a very, very toppy kind of chart. Once you get this long rejection, it does look like there's a bear market to follow through on Zcash. But Monero, king of privacy coin. Wow. Any thoughts on this? Well, this has literally gone to all-time high. It's broken all-time high. King of private. The way how this coin works is fascinating. This is what Bitcoin was supposed to be. There's loads of education videos on Monero, guys, but yeah, I mean, obviously right now is a little bit overpriced, but man, if Monero is going up, I can tell you that there is, I mean, very wealthy people, or, you know, remember that those times when they were saying that Bitcoin was used for money laundering and for selling drugs online and all of that stuff. This is the one. Not Bitcoin. This is the one if you want to do illegal stuff. I shouldn't be saying this on YouTube, but this is the one, because it's I'm not sure if I should be talking about this at all really on YouTube, but it's just interesting. It's just the technology, okay, that is behind Monero, where you can't. Should I be talking about this? I'm not sure. We'll find out tomorrow. But anyway, I'm just talking about the crypto project. Not that I'm privacy. Yeah, right. XMR is the real OG. It is. You know, the good thing. Well, the good thing. I'm not gonna say it's a good thing, but about Monero, when you send it to a wallet, the receiver, you cannot see who sent it to you. Okay, you know, basically when you go to the blockchain, all right, the XMR blockchain, if you try and figure out who sent that Monero, you literally can't. It's only a code that you have on the validity of the transaction. So you basically can't see who's the sender, you can't see who's the receiver, and you can't see how much has been sent. So it's super interesting, and apparently they've been having some upgrades, and it's like the ultimately privacy king cryptocurrency, because blockchain is open, right? It's an open ledger. You can see the transactions, and now you can literally find out who sent that Bitcoin from what wallet, and especially if you've been mixing it with centralized exchanges. If you mix that, you know, you want to create a Bitcoin wallet, either Ledger or a Trezor, and don't do any transactions at all from it, right? It's just receiving, right, for the long term. If you're looking for having Bitcoin like for the next 5-10 years, just create one where you're receiving, you're never sending to any other, you know, either exchanges or anywhere, because once you send to an exchange, they have your wallet registered, and that's it. You can't do, you know, if you do any funny business with that wallet, you know, they have you by the balls. And that's not the case with Monero. You know, Monero, once you do the transactions between Monero wallets, you know, it's close to impossible. I would say impossible, but it's close to impossible, but literally to find out, you know, who's sending, how much you're sending, and who's it been sent from, which is fascinating. I did buy actually some Monero around not long ago. I did buy some last year, but I did buy a little bit more here a few months ago, in the $300 zone. So yeah, I mean, I'm happy to see that. I mean, it's not much. I haven't bought a huge amount, but at least I'm happy to see an altcoin that's doing at least a 2x, right? Come on. But yeah, this is like one of those coins that you need to have a privacy coin, and if you didn't have SEC, then obviously Monero was your option. before it takes out all-time highs, preferably, right? Because the game is to take out all-time highs, and before it hits all-time highs somewhere. Once it hits all-time highs, then it's no longer, it's more interesting to start selling. Anyway, somebody pointed out Monero here in the comment section, and it was just it was interesting to see that the chart was going through the roof. Not that we're going to do any analysis or trading on it. It's just gone through the roof in the last few days. Holy smokes, in the last week. You know, with all this uncertainty worldwide, and when was the Venezuela thing happening? Was that literally happened last week, right? I'm not sure if that would have something to do of Monero going up. Not that it's a huge market cap. I mean, what's the market cap right now? 12. Yeah, it's not that big actually. If we consider like 12 billion. Not as big, but yeah, this has good potential to go to many more billions. I wouldn't say the trillion, but maybe 100 billion in the next coming years. It is the perfect privacy coin, that's for sure. We want Andy still here. Don't talk about Monero. Yeah, very true. I should really stop talking about that, because it is, you know, with this all thing about AI automating bots, you know, if you do get someone talking about Monero or how it works and the rest of it, nowadays we don't want to do that. I'm just talking about the technology. I'm not promoting anything about Monero, but just, you know, it's actually Monero is the real OG, brother nature. It looks like it is. Mark Dutch, much love to you, brother. Thanks for joining the stream today. Well, I'm off to commit. Yeah, exactly. DC 5330. Yeah. But Bitcoin was meant to be like Monero, right? Privacy is important, but with nowadays it's super easy to track Bitcoin transactions. Super easy. I would say, you know, Bitcoin is less private than your bank, really, because as soon as you transact with an exchange or a third party that has your details, you know, your IP address, your email address, then they know that wallet is linked to you, and that's it. Privacy has gone down the toilet. So that doesn't happen with Monero. Anyway, yeah, Bitcoin, that's what we want to see. We know the scenarios, we know the details. Guys, remember that you do have 30-day trial, okay? We've been working on this for the last few months, getting the team together, getting all the different products together. And there's daily updates, daily setups, daily analysis every single day on the Telegram community, okay? And you do get 30 days for free. You get the free trading playbook, which me and Devil have been working on for the last few months, which explains how to read market structure, high probability setups, okay? All in one PDF book, okay, that you will get for free as well. You just need to send me the word promo in the Telegram and follow the instructions so we can get you that trading playbook and 30 days for free inside of the community, guys. Take advantage. This promotion is only going to go till the 14th of January, which is tomorrow. Only till tomorrow we'll be talking about this promotion of getting 30-day free trial and the trading playbook, okay? Just send me promo in the Telegram, which is the first link down below, guys, and let's hop you in the trading community ASAP. How can I join the trial? I already have Bluffing account with which I use. Send me the word promo. You send me a DM and we can sort you out, okay? We can sort you out. All right, Neji Boob, much love to you. Update on Solana, Zec similar. Zcash is difficult now. Lots of rumors. Stay cautious. It definitely is, as Mark Dutch is saying here. I think part of or most of the team, I remember reading this somewhere, that Zcash team is kind of splitting up, right? And Money Printer doing its job well to pump this POS towards 94k. Yeah, it does look a little bit intimidating, this movement to the upside, I have to say. There is potential for the bears. I just don't want to. I don't want to try and catch, I did take a little hit here. I had to take a little hit. It would have been a bigger hit here. I did short at the 92.5k zone approximately, and just decided to cut some losses here. Because we pushed out with a bit of volume, and yeah, there will be ways. If it is going to be bearish, there will be ways to jump in later. There will be ways to jump in later. As I explained, I'm not expecting the price to move down in a straight line. If it were to reject at this zone, we're going to see the waves, right, throughout the next coming days. There will be a moment, right, that you can detect that first initial sign of weakness, and the bounce is going to be interesting. And that's where I want to join the short, unless we get a couple of 4-5s here, which is going to be the moment for looking for that resistance at the daily and at the naked point of control. It's just not going to be. We're at a moment where we need to be a little bit patient to see what develops here. Either 4-5, 4-5, right? A little bit of exhaustion. Then it's going to be looking interesting for the correction, or either take out this higher low of today, preferably, right? And then the bounce, wherever bounce happens, that's going to be the moment, because I'm interested in the third wave down, right? Market moves in waves, and we want to try and detect that wave correction. So not interested at the moment with this high volume breakout. I mean, this is what happens. You get a high volume pop out. This could very much be continuation. So not interested in the short at the moment, just maintaining a bit of the long. I had to take a bit of more profits on that long position to hedge against that little stop loss that was hit. Okay, not stop loss, I cut the loss basically on that short, which was the idea was to get below $89,000. But when the probabilities go against you, then you either wait for stop loss to be hit, or you just cut the loss, right? It all depends on how you manage your trade. I'm not the kind of guy that you're going to see me adding to the short when price is going against the price action, your entry basically. I'd rather cut the loss. It's usually the opposite for the people that start the first few years. It's very, very easy and very, very common to add to your position or hold your position in a loss because you don't want to take the loss. And I can tell you, long term, it's so much easier, it's so much better to just take the loss. So much easier to cut the loss when you realize the price is going against you with increasing volume in this case, right? And I'm just going to add to the short. It's going to roll over at some point. Well, that's, then that's wishful thinking, right? And we are not here for wishful thinking. The moment the price increases in volume and goes against your position, and you realize the bullish outcome on a few scenarios that you need to have ready, then you just need to realize that, you just need to cut the loss ASAP, right? And today was one of those days, guys. We like to talk about only profits and this trade. What a massive trade that we took. Right over here the other day. What a massive long. What a great short. What a great long here as well. What another great long here. It's not always like that. Today I had to take a small loss, guys. Right? What can we say? It's not all winners. And we need to be transparent about it, right? Not every day is a winning day. And today, it's that day, guys. So, but it's fine, right? If you've had a great few weeks, and if you take a loss, you need to talk about the loss. And you need to talk about why are you not holding that position? Why aren't you, like I said, you know, there will be ways to getting back inside of that short position, and that will be a winning trade. But I need to figure out that high probability setup, which will probably be in between today and tomorrow. Let's see with the community if we can manage to get into that trade to the downside safely with a higher probability, regardless if the price action is regardless if we don't catch the high, right? Because as mentioned, yeah, there's many shorts that we've talked about that you don't need to catch the exact high. You can catch a lower high in the momentum. And as mentioned, if we break this market structure, you know, there very likely there will be a moment where we can jump in on the break of structure, right? Doesn't matter if you catch the exact high. And that's what happened to me today, right? I kind of wanted to get into the highs of this potential lower high, and you just need to manage, you know, you just need to realize when you're wrong. And you know, if you're wrong, instead of adding to the position when the price is going against you with high volume, you need to cut the loss and wait for either exhaustion after the high volume, or wait for the breakdown of structure and then join in later on. We can join in later on once we get the clarity on the lower high bounces, right? So yeah, anyway, this is what happens when you do want to try and catch the highs or catch the lows. If it breaks again, I mean, the thing is, the way how I manage this trade, because I always risk the same percentage amount, right? You need to do that. You need to risk the same percentage, right? 1% to 2% and 3% only when you're feeling quite confident, or you can add to the position safely. You don't want to lose a 3% trade. For me, it's a bit of a hit, because obviously it's your max. You know, sometimes a winning trade is 3%, 4%, right? So when you lose 3%, it's a bit of a hit, bit much of a hit. So you always want to risk 1% to 2%, right, on your trades. You know, if I get into this trade, and what that means is that if I am entering into this trade right over here, I will only risk 1% to 2% of my stop loss in this position. If we take out the lows, I'm losing 1%. And if I take this as a swing trade to the downside, and I mean, obviously the rest of it is not making that much, maybe 1 or 1.5%, if you can manage to add to that position safely, which is my case right over here with the long that I still have open. But yeah, if I'm entering a position here, I calculated this short with all of this has a 1% loss. So this is the same loss than this one right over here. I took this more as a swing trade, and what I wanted to do on this short, as it was 1%, and I wanted to make it a 2% just to see if I could make 3-4% gains here on the movement down to take out 89k. My idea here was, okay, I'm going to try and catch the Pico top, depending on the price action that we get to the upside. You know, I'll either close, which is the case with increasing volume, or we either hit the golden pocket and we get a solid rejection, which we did reject, but we corrected down. We got a quick squeeze, bounce back up. But what I wanted to see here to add to the position was mainly a solid move down here and the bounce. And then what I wanted to do is add into that short and stop loss. Obviously, you know, get above the last lower high. So you got an impulse down, correction, and that original position that I had with stop loss up here, which is 1% of my capital, increase it 1% after getting the movement down, and obviously lowering my stop loss and my entry here once I have the price kind of in my favor. Right, so that's a good way of compounding into the trade. And when you want to try and catch the top, you literally want to use less risk, which was the case for me today. I'm like, I'm going to give a bit of a room as a breather here because this might be a little bit noisy, but we got to pop out with higher volume. And that obviously is alarming. It's like, okay, you've got to move up with very high volume. It means one thing. You either get continuation up or you get maybe 4 and 5s, right? And you still continue grinding to the upside. Or you get the rejection, and then if so, I'm happy to take that loss. It doesn't really matter. But I cut down on this trade to 0.5% approximately, just because of the volume. You know, it's just not nice moving up here aggressively. So just a little bit of the story. Always leave a small percentage open for the braggers P&L screenshot. Yeah, exactly. Exactly. Bath Mario Vallejos, much love. Today was a cut loss day. Okay. Not all days can be winners, right? But it is what it is. We need to be transparent about it, right? We love to go live and say, you know, banging trade. Look at this, that, this long, this short. You know, but today is one of those days that I had to cut down on the loss, you know, and it happens, okay? It does happen, and I know it sucks, especially if anybody follows through. And you know, I'm very much worried when I talk about trading setups. I mean, we didn't talk about any main one on the live stream today. I talked a little bit of the plan, what levels need to be hit, you know, an impulse down, a correction. This would be already a very, very good bearish sign to get this sharp leg down to hit these higher lows at 91.7, or get the wave 4, 5, which we still don't have. We still don't have a solid correction here in a wave 4, I would say. It needs to be a little bit longer, similar to the wave 2s, or at least a little bit longer after the high volume move. So yeah, it is what it is. We can't have winners every day. We love to have winners. We love to brag them about them on the streams. And we had a beautiful one here last Thursday, which was on last Thursday's stream. Of course, weekend we did not do any stream. You know, this was the weekend's price action, so there's not much to trade in here. But the long setup, the main one, the recent rate one from the live stream was from last Thursday, basically. And we are looking for a little bit of a day trade. We're looking for a nice move to the upside, and if we can hold some or compound some in, which is my case at the moment, you know, who knows, if we hit 95 to 97k, even better, right? You're still compounding this long because you want to try and maximize some profits here. Anyway, let's go through the comment section, see what's going on. 30 days promotion access, that is damn right. Read here what Mark Dutch has to say, guys. We've been working on this community for the last few months very hard. Myself and Devil got the rest of the coaches as well, and combining all of the products to put them all together. You also get the trading playbook, guys. You will not be getting this after the 14th of January. Take advantage. The trading book that we've been building, myself and Devil, that talks about market structure and high probability setups. You get that for free, guys. Okay, and a 30-day free trial inside of the community. Just send me the word promo to my Telegram. You got it in the first link, guys. Take advantage of this. Mattia, he is live, my man. Much love to you. We've been going through a little bit of CBD learning. Okay, myself and Mattia. We're going to play tennis very, very soon, my man. Not sure if it is going to be tomorrow or Friday, man. When are we playing? Let me know in the comment section. CBM Crypto by Mattia here in the comment section, guys. Go and check him out. Go and check his channel. Great content every single day. Technical analysis, news, latest news. I think he was talking about this whole fiasco that was happening with Jerome Powell. What the heck is going on with this guy? Is he getting threatened? What's going on? What's going on over there? Much love, CBM. Andy, is the trading book available for already pro members as well? Yeah, I would say so. Send me a DM. Yeah, let me just get the team together. Send me a DM. Send me. You got my DM. It's down below, and let's get you that book. Okay. If you're a member already, even for who is already in the community and the trading book, I would believe so. Let me confirm here with the team. Just send me a DM and I will confirm that. Okay, I'm not sure if it is just eligible for the new users. I'm not sure what we got. Our terms and conditions, of course, guys, and you need to understand that, which I need to double check. Crypto by Mattia, much love to you. Friday, brother. We're doing tennis on Friday. We need to start warming up. For tennis. We need to film, guys. We need to film CBM, Mattia, for the legends to watch our tennis match. Even though I suck at tennis, we're actually okay. The last day we played, it was 7-5, 6-0. So the first set was pretty good. The second set was, I got destroyed. Yeah, Mark Dutch, almost. It was 7-5, and then the second set, I lost 6-0 against this MF guy. 6-0. That was embarrassing. But the first set was 7-5, which was okay. I just felt down once he I was tired. Anyway, update on Solana and stop talking about the Playbook. Much love, Path Maria. Let's go. Update on Solana. Anyway, Bitcoin pumping. It wants to pump. It's looking a bit corrective. The movements down are looking corrective. It's just punching up to take out the highs again and again as we've had the increasing volume here. You never want to fight against the increasing volume. This is why I'm not adding to position. I need a little bit of more information here. And we'll see what's going on. Anyway, update on Solana. Is Solana pumping? What is going on with Solana? Interesting where Solana is at the moment. It's coming to all of this noise, all of this choppiness, resistance. Holy smokes. You can see that fair value gap here on Solana. Fair value gap, right? Which is a snapping point. It is building the momentum into that level, right? And it's been a very, very attacked resistance. The $144 zone. Look how many times we've attacked that level between November and December here on Solana, and we're literally coming up into that zone. A bit of an Adam and Eve there. Does look a little bit of a double bottom situation, and it is forming very bullish market structure, higher lows into the resistance. A bit of an Adam and Eve here, leaving Elliot Wave theory on the sidelines, right? Bit of an Adam and Eve here on Solana, just tackling that resistance. Spike down, neckline that's been, tested a few times between November and December. Round formation, right? Round formation here on the eve. And the more you tackle, as long as this market structure does maintain bullish, what I would be aware of is the corrections. It's always, you do not want to long obviously into the resistance, right? It's just not a good idea. If Solana gets a sharp move to get close to the lows, I would be very much attracted to an SFP from the lows, right? If you coming up into a resistance, you know, you want to get into the correction, which is close to the last higher low, right? You want to get into a long in this zone if you come down. If it's an SFP, even better, right? To then take profit at the highs. Will it be this one that breaks, or this one, or this one, or will it not break and reject? But you don't want a long into resistance, right? We know that. So getting close to the last higher low would be the best deal here for risk management, right? Even though it looks like it's going to pop, but you know, this looked like it was going to pop, right? But then it comes down, SFPs from the last higher low, boom, that would have been your long, right? So kind of a bit of a similar scenario here. You don't know which one is going to break through. Will it be this one? Will it be the next one? Will it be the other one, right? But preferably if you want to attempt a long, you know, you want to get into the local higher lows. Don't be that guy. Don't be that guy that longs here, right? Because the guys that long here are getting, you know, they're getting shaked out. I'm a skydiver, RVM3, much love. Try 2 rackets, Andy, no financial advice. Yes, sir. Tennis live stream, also very possible. We can do that, CBM. We can do that. I'm a skydiver. Wow, RVM3. I never skydived before. I'm not. It's not something that I'm like. I want to do. I like my feet on the ground. I like my feet on the ground. Time to short silver. ICP got a nice rally today. Dylan, which is one of the coaches that does the analysis also in the community, did actually talk about ICP long a few days ago. Intraday long, I talked about a long position here on this low right after the crash that we had on the 10th of October. We formed an interesting dead cat bounce higher low here. And it's, you know, I'm not sure if it was a stream, somewhere in December. Interesting for an SFP, very, very interesting. You got, you know, the fair value gap, higher lows. You're getting some little bounces from this level at the moment. Not bad here for the longs on ICP at the moment. We're just testing the local lower highs, which are getting reacted. Yeah. Anyway, let's do one together. Skydiving. That's almost as dangerous as trading crypto. Yes. Very, very true, my man, Mark Dutch. Yes, it is. Okay, thank you so much for your updatation on Solana. Much love to you, Ruxarkan. Much love. Man, these names, I'm sorry, I can't read some of them. Supreme Court ruling on tariffs maybe tomorrow, says Trans Travel. Interesting. Interesante. Beth Maria Vallejos, much love to everybody. It is 10:30 here. Who's chilling in Andy's Andy's bathtub? Beth Maria knows paella at Andy's. You're damn right. Anyway, let's go. A little gay is okay. Mark Dutch, much love to you, my man. Much love. Visit to Sri Lanka, Andy. I'll host you. I own a travel company. Absolutely phenomenal. Sri Lanka. I wanted to go to Sri Lanka actually this year. I was thinking about maybe going in November to Sri Lanka. I think it's very beautiful, at least what I've seen on the videos. Much love, Alex. Appreciate you, BTS 845. General Dictator, Mark Dutch. Hey, yo. Yeah, guys, gonna wrap it up. Okay, I did start a little bit late. I had to rush out today, but unfortunately, I did attempt a short, but I think it's not sensible at this moment for the short on Bitcoin. We need to see a bit of exhaustion. This would not be enough for the wave, kind of just scratching. But if we do take out the highs and then again take out the highs, that's the biggest move that happened today. This starts to looking like exhaustion, and it could be looking interesting. If we do get that movement down to take out this higher low at 91,700, I would be in favor of getting below $89,000 and looking for shorts tomorrow on the bouncers. Could be the name of the game. If you want to know more about that, Devil is going to be focusing mainly on the updates. I will jump in as well to see if I do find out a setup. You do have a 30-day trial, guys. Remember, first link down below. Send me a DM with the word promo. We've been working on this community for the last few months. You get the free trading playbook, which we go through market structure and high probability setups that you get for free, guys. And 30 days in the community. Send me the word promo to get all of the instructions for you to jump in the community for 30 days and get that playbook. Thank you very much. Mark Dutch, thanks for joining. Beth Maria Vallejos, Rudy, skydivers always carry a second spare parachute. Can you imagine a spare trade if the first goes wrong? Very true, Rudy. Very, very true. Much love. Mark Dutch, RVM, Rudy, Beth Maria, General, Dictator. Thank you very much, guys, for joining today's stream. I'll be back tomorrow with a little bit more energy, a little bit sooner. Let's make it a couple of hours before New York Open and get some scenarios ready. Today we just had the news, and New York Open, we're already popping to the upside, so we need to try and get in sooner. I wanted to share here some educational content based on, there was actually not a bad long setup here, SFP of the fair value gap, right? We talk about these trades a lot of the times here just for educational purposes. High volume move to the upside, higher low, a little bit of a range. That higher low almost always becomes a great SFP when you got a high fair value gap like this with a high volume. Okay, I wanted to fit that in with the education today, but I completely forgot. But anyway, we talk about this many times on the stream. Much love. Thank you, guys. I will see you tomorrow.